Good morning, everyone. This is Rose, and today is Thursday, November 3rd. It is 3 minutes after 9 a.m. Eastern Time. Welcome. All right. Let's see. Big day yesterday. FOMC went up and make the market go up and then come down. It was a bit of an interesting, which was right here, setup. We ended up finding resistance there, and then the big sell-off. But now, market on a higher time frame was actually distributing, which I'm going to go over that a little bit before I go on to smaller time frames. Well, let's take a look at what happened on the daily. This right here, this fallen trend line, this resistance, we did test it for the third time, and we breached above it. Now the problem with this, that is the third touch, 1, 2, 3, and it peaked above, reached a moving average, which is 100-day SMA, and then came right back down. Okay, so right before the FOMC, we had a bear body that yesterday was bear, and I said, it's kind of, making me nervous that we are actually now way below this line, and I said, I think we're going to come down to these levels. Now they made it look like it's going up. So at one point it became a bullish bar, but nonetheless it came down back in the same rotation, first to this trend line, and then that trend line. And look where we are now. So bears are seriously taking this as a double top, okay, and they're trying to prevent this breakout, and they kind of did. Where are the continuation bull bars? Bulls really needed strong bull bars, okay, to get back up here. So we're taking a pause now from going back up to this level. I'm going to leave it alone, but I'm also going to remove these now. I'm going to leave that because it's kind of an important level. Okay, so we're below the October 18th low. Bears want to come all the way down here. There is a buy zone here, okay? Now, we're testing a neckline. We have a double top, or you could call it a triple top if you like. So we're up on this, down, up on this, and now we're coming down. So up, down, and up. Double tops, major trend reversal. The market is selling, but we have strong breakouts, okay, break of structure, another break of structure. In fact, you can even take it from there, a strong one. And we did sell strong enough. Then we couldn't stay too long. Bulls started to show interest. That is a good breakout. They're trying to change the sentiment. The problem is they made a new low. So market still bearish. Now they're trying again, but they should not have allowed this. This should have been a higher low, okay? Because we did this, then we are doing this, there's a confusion here. Bears are not letting go. So in order for me to use this area, buy zone, a strong buy zone, okay, I needed not to see this. This should have been some kind of a higher low. So that makes it difficult for bulls okay, to buy down here. But this is also now a trading range, and we're at the trading range lows. Now, something a lot more interesting, and yes, this is not a higher low, but look at that body. None of the bodies are breaching. None of the bodies are breaching below it. So, is this a higher low? Can we use this as a higher low? Well, all I know, market is down here. There's a buy zone here. They're probably going to want to buy. Let me see where the price is. It's 37.32. So it's 37.30. We're up here. And if we somehow continue to sell today and break this, okay, this is where I would look to buy. But the bears want to break and then come down. Now, why? Look at this. Trading range, amount of breakout could be projected down here. That could bring us into the support. I'm going to take a look at how I drew this because sometimes I miss, so I have to adjust. I don't have enough information, but you got the point. So obviously we're not going to get here in one day. This area could act as support here. Okay. We could end up coming down here today. And we already got that measured move, so we don't need to worry about it. But there's a much bigger measured move. Let me measure that a little bit. It's a bit of a difficult one. But look where it's ended up. Okay, so this is what the bears might be seeing here and using this trend line as resistance and wanting to come all the way down here. So we'll find out if this is just a cup, okay, and handle, and the bulls are going to try to breach this once again. Now, here is another way of finding. We have an impulse move down, correction, impulse move down, correction, okay, or, and if this was the last run, okay, so this would be your wedge. It's not that strong, but regardless, bulls actually breached that and then went above it. Now this is a problem. This should have been like this, okay, but it's not like that anymore. So the correction, the second correction, first impulse, first correction, second impulse, and this would be our second correction. That would put us in the final leg down. Then I would say from here to there, we're going to start to ascend. So I don't know if the bears are actually done. So this is going to be an interesting day today. And I want to go back to now, the hourly, Globex hourly quickly, which is right here. So I had a trend line, and we met that trend line in a way. I had to adjust it a little bit, but you can see, right, broke this, and we're back here. That zone, I said we could have two things. We're probably going to bounce here. They try to bounce a little bit, but then they kept going, selling, right? End of the day. And I said it's because we have equal lows, support, ton of liquidity here, underneath there, even all the way here. They want to tap into that. And if we do break it, we could end up using it as a resistance and continue to sell and trim this trend line, which that's what we did. So I'm no longer interested in that. Or you could have used my SR flip line breakout test area, okay, so that the markets seem to coming back to it several occasions, now using that as resistance. So what does this mean? Well, you gotta look at the bigger picture, right? So you had some kind of distribution here, and you have a really strong balance zone here. Okay, so we are trying to test the low of that balance zone. I'm sorry, the middle of that balance zone, which is right around here, which we haven't even arrived yet. But right underneath that balance zone, I have yet another buy zone. And that's the one. Now I'm interested. Now I don't know if we're going to continue to sell this, but bears continue to sell this in the Globex session, but it is a lot. Now, I don't know if they're going to be able to break this at the open. Probably it's going to be too low to sell. They're probably going to want to go up, find some resistance, and then try to swing it down. So 3680 ends up, let's see, 3680 ends up being just around where Asia 1, Asia 2, and Asia 3. 3 to 1. We might even go 4 to 1, 3660. There you go. 3660 on the higher time frame. Look where it is. Right in that buy zone. This right here, where we are right now, Asia, okay, breakout. Why Asia? Because Asia is the balance zone the market breaks out of. Okay, so that's 1 to 1. Look at 4 to 1. 3660. 3660 is right here, right there. It's a great area for market to keep selling this. No longer interested in that. And then come down, maybe first rejection somewhere here because there's a gap there. Okay, might even look at that. Okay, but if we start to become bearish, we could sell into it and then finally get our really nice strong bull swing. So we'll see. I mean, gap and go. Well, I don't think so. Somebody cracked the joke. Now, I'm going to look to see how we're going to open, how bearish we're going to be opening. Now, to sell this, we still have to pull back a little bit. We need some kind of pullback, right? This is already too low. But seems like bears are not done yet. So we'll see. Look at the week. The weekly bar is an outside down bar. So next week could be bearish also. But remember, this is hourly. Although look how much they can actually move in one day. So if bears really want this, they can continue to sell. But so much selling the day before will get continuation the next day, okay, before it goes into some kind of sideways trading range or even reversing. Monthly bar is reaching the prior month's midpoint, okay? So if you actually measure this month, we're right there. Maybe there are some buyers there, but they're going to have to show us if they want to buy somewhere around here and reverse it earlier. And that would happen only because we might be testing some kind of a trading range. But seems this area right here is where market wants to come down. It's also kind of an expanding. It's expanding out. Can the market come all the way down here? 3,400? Sure. Maybe not. Maybe 3,500. Okay. But if we break this balance zone, it's possible that we could come down. You see this trend line right there? It's problematic. Look at that one. Trying to connect as many tops as possible, even though there are overshoots, but it just doesn't matter. You're doing this on a higher time frame, so you don't have to be exact. But you got the point here, right? So market really wants to come down on the daily and test these lows and maybe get a measured move, want to break down. Bears are not letting this go, that's for sure. Okay, so now on the RTH hourly, I look at the range. We still have some time here. We have 1, 2, 3 push. Okay, I need to adjust that now. And we have a lower high. Okay. It also looks like some kind of a head and shoulders. You could say maybe this is a complex shoulder, this is head. If we go sideways a little bit, we can still sell. Or you could say, no, this is the left shoulder, head, and right shoulder. And we already sold and we're at some kind of a support. Sure, that happens to be the last week's low. But if we do break this, buy zone is down here. You see that? Strong buy. Let's take a look. Real quickly, I can see what's happening here. Bears were breaking structures. Right? Even here, this was a good attempt, but here's another low. So now things started to get bullish. That's good. First structure, maybe second structure, or second structure and a third structure break. That's good. Where did the impulsive bull moves begin? Right here begin. That would be your buy zone. So there's a support here. We might go up a little bit, but they probably want to sell. And this is where I would love to start a swing. Okay. Now, maybe 1, 2, and 3 wedge. But if they want to continue to sell, then we could end up coming down here. And that would be catastrophic because that is already 3,550 or 3,500. But I think this is where the bulls are waiting at the moment. And if we can actually break this, price is now 37.30. So we are already broke the last week's range. We are down here. Okay. So we are on our way to come down here. So today could be another bear start and then followed by sideways and swing up. Okay. Let's just see. Now I can leave this like this or I can adjust it. Or I just don't need it. I don't need to clutter the chart with so many different things. So keep the chart clean. All right. So we are going to open right around here. It's a little bit. This area is what I'm interested in. We are probably going to come down and test the first bounce will probably be around 37.11 area. If we sell at the open or go up and then come down. And then we could continue to come down here. This is what I'm looking for now. Well, we'll see how this goes. Now, on the 15-minute chart, I put this area. Why is this? Because this is a balance zone I found. I think it was last week. And I said, I'm going to put this gray area here because it's acting as a magnet. Okay? And that's coming from here. I don't know if you guys remember when I did that right there. It's quite large. I don't like large areas because it's kind of, then you would take the 50% of it. So I'm going to try to do a little bit better. There's an upper level here. So maybe we can divide this into 2. So I'm going to try to do a little bit better. There's an upper level here. So maybe we can divide this into 2. There's one right there. And then there's one right here. Just about. I'm eyeballing it. Okay. See, I no longer need it. This was not a good attempt. It's already done. See how market came down here? And I used it as resistance, so I no longer need that. But look where we are. We actually moved below that volume profile. So can we bounce here? We might. There could be sellers there. It's probably going to react. Price is going to react there, and then we might continue to sell into this area. All right, so I think we have a plan. And if they decide to buy and close some kind of a gap, sure, we'll buy with them. I'm not going to sit here and do nothing just because I see opportunity for bears to continue selling. But if market wants to swing higher, sure, or at least get to the 50% of this move, or the 50% of this entire move. Sure, it's bear flag. Could get another bear flag before start to accumulate. But in order to get that bear flag, we still have to bounce. So we have a plan. Let's talk about yesterday. Well, we all kind of did that. I don't really want to go through bar by bar. And if you're interested, we do post the daily setups on brookstradingcourse.com. You can look at the blog, but the blog charts don't have every single explanation. A much richer explanation you're gonna find it under BTC Daily Setup Encyclopedia. When you get the encyclopedia access, you're gonna have access to the daily setups as well. So those are the ones that you should be looking at, okay? But if you're a course member, we have a area just for the course members, daily setups. Okay, it's under the online course navigation, okay? Take a look at those. You'll find a lot more explanation, tips, okay, on those charts than the blog. So, Speedo, you just scared me. I had to check something. I'm like, what? Did I just show up here? No one warned me anything of. That's this weekend. Don't scare me. Oh my goodness. I thought I arrived late or something. Okay. That's October open. The last month. Although I don't care about that, but I'll just put it there. So we know. Last month's open. Last month's low. November open is up here, which is around there. News. Well, international trading goods, 8:30 came out. Jobless claims, 8:30 came out. Market ended up going down further. Productivity coast, we don't really care about that, but the PMI composite final is 945. Okay, so factory orders coming after that, 10 o'clock. ISM service, 10 o'clock is the big deal. All right, market is open, so you guys need to pay attention. We just gapped down. Okay, so 9:45 and 10 o'clock, we have news coming up. We might actually reach, let's see if we can get down to 37.18. 37.18 and 37.11. I like to see tested. we could end up coming down here before we reverse. That will be the 2-to-1 Asia right here. End up coming down here before we reverse. That will be the 2-to-1 Asia right here. Before we even reverse. Or we're going to find some buyers here. A little bit more, 37.18. I would like bears to actually tag it before have an attempt to reverse back up. I don't touch the first bar. It's always mystery to me, the very first bar, so I will not sell or buy that bar. To me, it's gambling. The first two bars are the most important bars for me at the open. That'll give you understanding of what the next 10 bars can be, okay? Or what the next 5 bars can be. So I stay out of it because these bears are probably going to want to continue their shorting at least a little bit. See, the first bar is confusion, but it's a bear bar. Now, in order to sell, the second bar needs to be a bear close. These two bars are overlapping at the moment. It could be too low for bears to sell, and that's why suddenly the first bar is confusion, and the second bar is still bearish, but we don't know how it's going to close. But now, if this is too low, they're going to want to pull back up a little bit to an average, find an average price to sell. So you can wait for bar 2 to, close. You can count about 18 bars from here, right? So 1, 2, 3, 4. Okay. So 2 bars from here, about 20 bars range. Okay. Find your 20 bars range. So that's 64. So that's 64. You're going to have to adjust it as bars continue to go down. Take out more bars from here. And the average price is exactly where the EMA is at the moment, 50%. So let's see how the bar 2 closes first. Now, the first 2 bars could be, still dojis or whatever. And then the third bar could be a good, strong bear bar too. Okay, because if these bears want to continue the selling until the end of the first hour or the second hour, they really have to show me something here. 2 bars, small bars overlapping like this, although they're not small though. ATR average is 14.5. So don't be fooled there. These bars are moving about 14, 15 point average. Okay. But 2 dojis side by side, it's confusion. It also tells me not many bears wanting to sell this low, okay, because it is too low. So they might be looking for an average price around here. So they might look like suddenly we're reversing back up to the EMA and buyers could join and they could just trap them right up there because there's also join and they could just trap them right up there because there's also Okay, so look, they're making it look like they're actually breaking above some trend line. And then they could make it look like bullish only to trap these buyers right here and then sell. I don't see a strong short covering here just yet. So now we have a third body. All right, so what the bulls are doing here? Well, they got bar 2. Now they're trying to get their second bull bar. Bar 2 closed on its side. So they're making it look like it's buying. So they're trying to reverse this back up to this magnet area to the average price. I have now 2 average prices. So bears couldn't get a second bear bar, but the bulls are getting it. So what does this mean? Well, they already reached 15 point scalp zone. They're probably going to try to get to the 20 point. Okay. So if we can actually close this bar on its side, we could actually end up going up to 37.45, 37.46, but they need to close this bar on its side very bullish. Okay. Because we are at the 15 point scalp zone. They just scalped, and that upper wick, the body came down. It's because they're taking profit. But if they can close this bar somewhere around 37.41 area, oh yeah, we could easily continue to go up to 37.45, 37.46. That would be the 20 point scalp zone, which is around here. There's a gap that they're trying to close. You need the second strong bull bar for market to go up, or this is going to end up being a sell the pullback and continue down here. So it's a bit of a mystery here because I don't have yet a second bull bar. So I didn't buy it because I already tested the 15 point scalp zone. So I want to see how they're going to close this body. Don't want to be stuck in anything. So we have a 75% chance of continuing the sell-off the first first 2 hours. And that's why I'm hesitating to buying this. I actually said it wrong. So in order to get according to L's, let me take a look at my trusty chart here. According to L's equations and probabilities, you actually have, on a day like this, the prior day is a strong sell or strong bull day. In this case, it's a bear day. You actually get about 50% chance of follow through, selling or buying, but the 75% chance of going sideways. Okay, so strong sell. You see why I didn't want to buy that right there. That right there is the reason. We could not get above 37.41 with a bull body close. We couldn't do that. So I was not interested in. And then the body closed, bar 3 closed bearish, okay? So, but it's not strong. So now we have alternating bars. We have an outside bar 1, inside bar 2. Market made it look like buying, which I warned you, only to trap those buyers, and then it comes down and closes down here. So now bears are trying to take out the inside bars low and then take out the outside bars low and continue to come down to this level. They're going to have to close that bar right down here. I have to adjust my range now, 20 bar range. I have 4 bars here. I need 16 bars from here. So that was 18, 17, 16. So I'm going to take this. Okay. Now, for any kind of swing up, you need some kind of a double bottom. So I look for that around 10 o'clock, or a kind of a wedge, okay, around 10, 10:30 or 10:15 before I even look for any kind of reverse and swing higher. Now, I'm also watching the Globex charts and the 1 hour chart. Bears want to bring the market down to the October 21st low, okay? Because that kind of aligns very well with this balance zone right here. So if they're going to sell this, they're going to have to break here, come down here. They're going to have to close this bar on the Globex chart down here, come down here. So they got a lot of work to do here. Okay, is this spike and channel down? It's going to grind, and then finally we get some kind of a reversal. But that reversal is not going to be easy. It's probably going to go into some kind of trading range first. So you just have to filter out things, okay, such as buying, so that you won't get, stuck in situations like I explained. Confusion, okay, came down a little bit and then started to go up and then had a wedge top at the EMA and then started to swing down. Confusion, this went up, came down, another wedge, and then came down. So when confusion went up a little bit, found sellers, trapped the bulls, came down, another down, and then found a wedge bottom, and then the swing long began. So I'd like to see this. And I think this is what we're going to end up having. We didn't have 2 consecutive bear bars, okay, and we didn't have 2-bar reversal or a range breakout for bulls to go higher. So these two seems to be, okay, what we may have. $10 news coming up in 10 minutes. We have another news just came out. It's actually a very slow morning. Not much of an event. They're still healthy though. I mean, the candles, yes, the candles look smaller, but look at the range. They still move. They still packed some, power there. 10-point move, 10-point bars. That's still good. Asia is still trying to reach. It's 2-1. We're breaking that trend line now because market is trying to reach here. We're about to reach my target on the RTH 1 hour. So it's going according to the plan. I really wanted to see how that bar 3 was going to close. Bulls had a chance to close it on its high, but they failed, so you can't buy it. And then I measured how much actually they moved. It was only 15 points. They just scalped it and then just came right back down. So that told me it's a good idea not buying early, at least, right? You do not want to gamble. Now, we're going to go sideways eventually, and then I will look to see if I can find some healthy accumulation to buy this. It's kind of overextended here. Again, there's a trading range here, right? So we're probably going to reverse a little bit. So if you sold here, they're going to take profit and this could bounce a little bit. But the bears really want to actually push this down towards 36.99, 50, 3,700. Let's just roll it up, 3,700. It's just right there, so close. So we could actually push this. Happens to be 3,700 below the Asia 2-to-1. So we're definitely gonna tag that. Still coming down. Now, if we do pull up a little bit, they're probably gonna sell it. But this bar is strong. There might be sell stop orders underneath. It's a breakout follow through, or this is the breakout bar actually. This bar didn't really break out. It's a fake breakout, but this is a breakout, so they're looking for a follow through. So if this bar 6 closes bearish, that's going to be a follow through, and this could continue to come down. But news coming up less than 5 minutes. Okay, and that's a big news. It might make us come down fast and then reverse right back up. We're probably going to come down and test the 3,700, 3,703 area, but then we're going to reverse back up. Okay. This pullback and swing bears trying to get their target on the Globex chart. We're going to bounce there, so watch out. We have a wedge failure. Okay. So you have a measured move target. You can either measure from there or measure from here on the higher time frame. So breakout. I'm going to take the conservative approach, and that kind of aligns with what I said earlier, 3703 or even 37. Now, how do I get the 3,700? That's not what I'm trying to do. So if that's the breakout, we can even further go down into that balance zone that I found, 2 of them. That's the smack in the middle. So we could even extend a little bit further. Okay. If that's what they want to do, because ATR is 10. So that creates overshoot of some magnets or targets. Further. Okay. If that's what they want to do, because ATR is 10. So that creates overshoot of some magnets or targets. This is the 50% follow through after a bear day. Now, what if we get a reversal? And a strong reversal, that's fine. That means I would look for some kind of a strong bear bar and reversal, like a V shape in a way, like maybe 2, 3 bull bars, pull back, and another huge bull bar. I will buy and take profit at the EMA and even expect continuation above the EMA, but I don't have that yet. All I know is that we reached my hourly target. Okay. Bears are still pushing. They broke that trend line. No longer interested in that. So I'm going to clean up my chart here. Now, remember what I was talking about yesterday, the structural trading. Double top neckline, expect a bear flag. Right? So we could get, how many bear flags do we have? 1, 2, 3. We might get another one, but then we're probably going to go up like that. Maybe first sideways, but this area is they're trying to reach on the hourly. We reached the Asia 2-to-1. News just came out. And an immediate reaction, of course, news. Just goes right back up. So, okay. I was not in it. I got out. There's no messing with that. We're probably going to come down here. But look, that Asia, I mean, how accurate is it? Asia 2-to-1 aligns so well with the news. So if anybody who did not take profit here probably hit close and gave back so much only to cry about it as the price continues to come down to my conservative 1-to-1 measured move target. So great representation is how news bars will shake you out of your trade. So we could get a little bit of pullback before we sell again to get the wedge. And this is what I'm interested in. That could set up around 10:30, 10:45, maybe 11 o'clock. Would give us average 16, 18 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 20, 21, 22, 3, 4, 5, 25, 26 bars. That's more than 2 hours of bullish reversal. That would be nice. All right, so that could be our future. I just want to wait a little bit for this news bar to settle down, and then I'm going to start counting points. You're still in the first news bar, so let's see where it settles. If it closes on its mid and further down from its midpoint, last second there's still 50 seconds or less. So bears really need to push this body further down if they want to sell into 3,700. Now, why did we bounce here? What was the reason? Other than being news. Say there was no news. Who's going to tell me? So obvious, it's right there. Other than being the first, front running the first measured move target. I'm going to get rid of that. Now, what was the reason? No, not wedge. There's no wedge. Wedge failed here. This is a breakout of a wedge. Just take a look. Just move your mouse underneath the very last bar, whether on the 5-minute or 15-minute, doesn't matter, or the 1 hour. Just take a look at that price point and tell me. What do you see? What do you notice? Where are we in terms of on the chart? No. 37.05, and we just overshot with 3 ticks, but look where we reversed. Market was coming down 5 points, 4 points above that into the price point ends with 5. It's going to bounce. Remember? Pit stops. Pit stop. Exactly. That's another reason. Only ES traders would know that, unless somebody explained it to you. And many won't. But there are machines looking at those levels. All right, so the market moved a significant amount and they're trying to get a 20 point, and that's just about, I think, 37, 26, and 27 area. They're going to take probably profit with this bar here. Market, yes, likes to take profit every 10 point. Why? Because it's a mini swing, right? Swings will begin with 5 or 6 points. I look for 6 points, but initial scalp is 5 point. They start to close bull bars above the 5 points. The swing begins. Your first stop is 10 points. So, and if it comes to about a price point ends with 5, chances are if they're coming down under, they're going to bounce to the downside. There's sellers waiting there. Buyers will take profit there immediately. It would give you, you can go with the ATI value, whatever, to scalp it. And if it's coming down to the pit stop from above, 4 point above, then expect a bounce to the upside right there. Just pauses there, takes profit. Every good thing comes to an end, right? So you're point counting. ES loves to take profit at 5, 10, 15, 20, and then a hard trend goes 40 points. Yesterday we saw 80 points. First trend, pull back, second trend, and then added another 10 points. I measured that for you. You can go watch the webinar. Towards the end of the webinar, I measured it and I showed it to you. It was exactly 90 points, I think, if I wasn't wrong. So they got a 10-point extension after that second 40-point trend run. So no wonder they want to continue further down, because they probably got another 40 points. That makes it 120 points. Well, don't take my word for it. Just, get your trusty ruler and start measuring. I'm going to take it all the way from here. That was a lot more than 120 points. So if you divide 200 to 40, how many trend runs they did? 5. And now, no wonder they're exhausted and they're going sideways. It's a lot. But we were here. They even came down further, apparently. I measured 80 and then 90. They even sold further into it. Look at that, 150. It's a lot. But I'm doing something wrong here. What am I doing wrong? What is it that I'm doing that I shouldn't be doing when it comes to measuring this? Why shouldn't I measure all the way from top here? Who's going to tell me? Look at the reversal. That is a significant amount. If it's more than 10 points, I cannot measure from here. That is 36, almost 40 points if you take from here. Look, that is a trend, a hard trend printed by bulls. So I can no longer measure from up here. I have to measure from here. So that's how I found my 80 plus. Since there's not much of a difference, I'm going to start from that pivot level of bar 68, and I'm going to measure it. Look, 90 points. You guys didn't say anything. I did that on purpose, measuring from here, and I found yesterday 90. We went over it, and I even explained why I would not measure from this level, because bulls put a huge trend up, about 40 points. You have to reset the count. So no one said anything. You guys are sleepwalking. Wake up. That should wake you up. So now they continued down. I'm going to measure that. 140, just about 145, 46 points. Right? So that is what? 120, right? 100, just 80, add another 40. So that's 3 runs, and then add another 40. Yeah, that's pretty good. But they're exhausted now. So they're going sideways. That's also how you measure exhaustion. All right, so let's go back to the encyclopedia. Came down. We went sideways. We need 2 legs, leg 1 and leg 2. Now, can they sell again? Sure. But we have a bull gap here. Okay. So we might go right back up, maybe here, and stay in this trading range for a while before we find buyers. Or this is what we're getting. We're going to go right above bar 3, and then we're going to go to the EMA, and we're going to try to close this gap. So because there's a gap, you see that, between bar 6 high and the bar 8 high, we have a bull gap. So that tells me bulls want to go and test the prior highs and actually get above it. So we're going to end up going there. So what I'm going to do is I'm going to adjust my 20 bar range. Okay, I no longer need this. Get rid of that. So I have 9 bars here, say 10 bars, add another 10 bars here. So that's it. I hate this all. Just about. Okay, where's the average price now? Right here. So that tells me bulls are trying to get to the EMA. That's the average price. 50% of 20 bar range plus the EMA is average price. So this is what they're trying to do. Sellers are probably at the EMA, and they're going to try to prevent that gap, okay, to be closed. So that's where we're going. Probably. We have 2 bar reversal. I'm no longer interested in that. 2 bar reversal. That is actually outside up bar because it's a micro double top. So, and this bar actually went below, so it engulfs that bear bar. So that means we're going to the VWAP or right around here now. So the Asia 2-to-1 acted as support, but look what we did. We actually tested my area of interest. We did test, and then now we're going up. So that worked fine. I'm going to get rid of that. Maybe I should keep it. I'll keep it. So is prior high is target. But it's now a trading range. There are always sellers here, maybe 5 point above, 2 point above, 5 point above this bar 3. There's sellers waiting there. I don't know what the distance is. That's about 10 points. So bulls could still push this further higher. But it's resistance now. When you buy this bar 9, okay, you're buying into a trading range high. They're forcing you buy too high, and then you're dealing with this bar now. So that was also the second leg up for bulls, okay? That's more than 10 points. So then I measure from here. We scalp just about, it's not really 20 points. They couldn't really get to the 20 points, but still, they tried more than 15 points scalp with that bar. It's just difficult to point count today because I can't use the pivot levels. It's just, if you use a pivot level, look, they're trying to get to the 40 point. But in between, bears are making more than 10 points, so you can't really use that. Every bar is, you know, average 12, 13, 15 points. It's ridiculous. So basically what you're getting here is the continuation of the FOMC day. It's the second part of the FOMC. If you turn this chart upside down, say the FOMC day, this was actually bullish, you would be actually getting a bullish continuation. That will be the second part of the FOMC. And it's the same thing for a bear day. So they wanted to test the prior highs. They come very, very close to it. And now they're trying to make a decision. Either they're going to come down again, give us a higher low or some kind of double bottom, or they're going to keep pushing to the EMA, which is average price. Now, this is obviously too low to sell, because if it wasn't, we would not have gotten this gap bar and another gap bar. There is right here between the high of 8 or the wick to the last bar, bar 10, okay, low, there is a gap still, okay? These bodies, 8 and 10, are now overlapping, so there's a gap. This bar is creating, bar 9 is creating that gap. Another gap here, you can see. So that means if this is too low to sell, no one wants to sell, where are they going to sell? Probably up here. And that's what I wouldn't sell until we get up here. Prior high, bar 3 high is still the magnet. There are probably buyers there, a little bit above. Bears want to keep the gap open to EMA. Now, why would they want to do that? Well, look at the bullish move. They're not consecutive bull bars, it's alternating bars, so it's not that strong either. The bulls are not strong either. So what does that mean? What makes this bullish move? Leg in a trading range. So it's obvious that we are in a trading range. We could come down here. If the bears keep the gap open, we could even come down here and make a new low. Okay? I don't like the fact that we're alternating bull bar, bear bar, bull bar, bear bar, bull bar. And that kind of lowers the probability reaching the EMA. It's a problem. Market is bearish. I think I answered that question, Sister Marie. Maybe she's talking to Brad. Oh, sister. Okay. I wasn't sure if you were in the trade room. But yeah, read the blog post that Brad actually wrote. There is, when you have, I think you just arrived, Sister Marie, when you have a day, prior day, this strong, regardless of the contacts, FOMC, a strong bear day, you're going to get a 50% sell through and then 75%, okay, going sideways. You might even get a reversal, 25%, but generally you get some kind of a follow through and then sideways. Anytime market sells or buys strongly, it has to go into some kind of a trading range before selling again or reversing back up. So that's what we are in. But I also want to find out, because we were so bearish, if this is too low, market needs to sell again. If they want to sell, they have to sell a pullback. Looks like this is right here. Okay, now I'm going to actually adjust even more because I have 11 bars here. So I need to get 9 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9. So that means this right here is my average price. And that's what the bears are waiting. Bears are waiting for market to reach there so they can sell there, okay? And that could bring us to that chart that I showed you. I'm stalking these two, okay? So now we didn't get to bear bars. Second one actually gapped down at the open. What if we get a double top here and not touch the EMA? That's still okay for bears. Any kind of double top is actually a bear flag, okay? But I'd like to see those double tops at the EMA. So at this point, I'm looking for maybe one up, another pullback, and then up. So I like to actually see some kind of a wedge at the EMA. So double top underneath the EMA, I don't know if I want to sell that. I still would wait for price to get up here. So this is what I would look for. I was really looking forward this one, okay, but that didn't happen. We ended up going higher. So this seems like what we're trying to do, okay? Bulls need to get above 37.35, which is pit stop. They need to close bull bars to keep going higher. So now you understand why this is average price and why they're trying to reach. They have to do better. They're aware that the bears want to sell this double top and keep the gap open, but the bulls are trying to close that gap or minimize this gap as much as possible. But look at this. We are at the EMA, which I said that we would. Okay, this is now danger. This is a sell zone here. Okay, they could still sell. I said we're probably going to get to the this is in the EMA VWAP. I'm sorry. We're probably going to get there, but the zone is there. It's there for you. Okay, so let's see what will happen here. I still would like to see bulls reach this area and then the bears to show up there. But double top acting. They're trying. Bulls are respecting that double top. Some machines are taking profit early. Can we come down here rather than going up? Sure, we could. But I think, well, I want to wait for this bar to close first. I don't want to say anything because my statement could change, and I hate that. That's why I like to wait for the bars close, because then you get the actual information. How many days? Oh, I don't know. You can actually figure that out on your own. Open the RTH chart, right? You have the deviator, so you can actually look at the price action, right? So pick a week or pick a month. There are 4 weeks, so just go through. I mean, statistically, I don't have that kind of data. I don't really chase that kind of data. Oh, that's really something. I just look at the current price action. Bars got every information I need to make a decision. So, but it's a good question that Marie asked, except that I just don't have time to do kind of a data collection. I'm sure there are companies actually looking into that kind of information. If they're selling, okay, alerts and things like that, they have to look at that. Bulls are still pushing. They might be even trying to get a measured move. If this bar closes strongly bullish, I don't want to measure right now because I don't know, but if I do, just to show you guys, we could end up going up here. But this is the first target because bulls want to close that gap. And magnets, close of yesterday, low of yesterday, we're oversold, okay? we are under the 1 hour EMA. We are under the 20 bar EMA, okay, on the 5 minute. So we are oversold. We are oversold. So that's magnet, EMA, but more than 20 bars gap, okay? So 69, more than 20 bars. So that means first touch could sell, or we could get a rejection double top and then we could sell again. So be prepared. But we have a really nice breakout bar 12, okay? So that presents a measured move target. So I would like to see the bulls go up and tag that EMA. I'm still holding my long. I want to see bulls actually tag, but I'm also ready to get out with that runner because they kind of finished the objective. And if they do close the bar 13 on its low, really strong bearish, I will exit out with my profits. I won't hold it because the goal here for bear is to keep that gap open and start to swing down again. Keep that gap open and start to swing down again. If I see this bar close on its low like that, I'm done. So what I have done, once I saw this bar, okay, I put a buy stop order above, and then I put a limit order here. Barely got filled, barely. I don't know how I positioned it because bars are too big. I put it there and just filled me. It didn't have to fill me because I was kind of eyeing the 50% of this bar, so it did come down 50%. And so I'm in with 2 contracts. I wanted to see the high, test it. I took majority of my, I had 2 contracts up here, 1 contract here, 3. So I got majority, meaning two contracts off. So I have a 1 contract still running. But if this bar closes like this, I'm done. I will get out with that runner. I could have added another contract here with the bar 9, 1 tick above. But problem with that was we're so close to the top. I didn't want to do that. I said I already have 3 contracts. I just don't want to, add another one because this is probably going to come down. So it did come down because those bulls were forced to buy too high at the high, which I explained. But then you got this. You could have added another one, but I didn't add. Now, why I didn't add? It's because I'm getting ready to take out, okay, profits. So, I mean, there's not much there. Just hold on to what you have and then be done. You don't have to keep adding and adding. I'm out all the way. I didn't even let that bar come all the way down to the bar 12. I looked at the time. It was the last minute, and this is down. I don't care if they go and close this bar all the way up here last second. I'm done. So I exit out right before they touched the bar 12 low. I was right around here. I hit close. That contract didn't run, but I made good amount. So I'm very happy with this run. It's a bummer that average price is up here and they can't seem to get to it, but that tells you how strong the bears are. That means they really don't want, okay, bulls to close these gaps. So, but this is not a true engulfing bar either. Okay, we have a wedge here. First push, pull back, second push, pull back, and a third push. Now, we have we're probably going to go up here because a lot of the bulls are stuck here. We might go somewhere here. They might buy underneath this bar. We now have 1, 2, 3 bar, okay, trade limit order market. So they're buying a close of this bar because many bulls, just like me, they wanted to see price hit here, maybe even go up here, and it still can do that. It's just that they're stuck. Okay, they might have even bought it, the close which they did, okay, and it went up a little bit, but now they're panicking, so they see 2 bars greatly overlapping. They assume this is a limit order market. They're going to buy that close, and they're trying to break even. So if they bought the close, their break even is around 50%. You can measure it and figure that out, but I'll do it so you can see what I'm talking about. So if you bought the close and stuck, and you buy the close of bar 13, where's your exit? If you load it up with a couple of contracts instead of you bought one and then you bought another one, you're not going to get here. Okay, you might, but if they're scared of this bar because it's taken out that bar's low, they're going to try to get out at the 33 pullback, and that's exactly what some of them are doing. They probably loaded up with 3 times, 2 times what they bought, and they're trying to get out here. But many could not break even. Actual break even is the 50%. So that's a problem. What does that tell you? It tells you that you got a wedge, okay, and it's trying to come down to the first target on that wedge structure. Up, here, I'll do it, right? Up, down, up, down, up. Where's it trying to go? It's trying to come down and test there probably. So it's a mess. They're bulls stuck. They want to break even. They bought it. Some got out. Some are still stuck at the 50%. They want price to get back up here and finish the job. These sellers, okay, maybe they sold underneath 12. I don't like to sell. I explained to you end of day yesterday how I would trail. If I want to sell, I would not have trailed my sell stop order there because it's a really strong, okay, bull bar. So it's tough. So I would assume that these bears are now getting upset because they want to be able to come down here. So there's a fight going on here, and I'm out of that. I've seen this many times, and I think Brad is out too, right? Because he said, I don't know where he bought. I think he got under, did he say he got under 3? He collected somewhere here. I collected here, he collected here because he didn't like some of the bars. And I did say these bars are alternating. I don't know if his assessment was, hey, you know, I'm not getting 2 consecutive bull bars. I'm getting bull bar, bear bar, bull bar. It's alternating. So how far is this going to go? Now, somewhere above that, you know, there are sellers waiting, which we talked about. That was about 5 points above that, right? So 2.5 point, 10 point came up to here. See, sellers did show up. So we are in a trading range. So he got out, he exited a lot earlier. I held on to it, but have I exited like he exited, then I wouldn't have my runner be a loser. So I wanted to exit a little bit closer, but you can never know how close it's going to get. So I looked at that 2.5 point area. I said, okay, I'm going to take profit here because this could just keep the gap open and then come down. So now there's a there are a ton of traders are stuck. Bears are not happy because they want to come down here. Bulls are not happy. Some of them got out, and some of them are still trying to get to that 50%. Some bulls are stubborn. They think that this could end up being a one big, okay, engulfing bar and get to the EMA and make those bulls stuck up here happy. That could happen. Okay, so if I see a wedge, I'm going to take the last bar that made the third push high. Okay, so I'm going to look for a first breakout, not going to sell it. If I want to sell this, I need a second entry. I can mark the 50% of that box. Okay, I would look for a pullback there. Then if I see another bear bar closing strong enough, that I will take that as my second entry. I would prefer it to come down and take out the prior bar's low or the body open to give me a second entry short. Not only we would take that out, we would also take bar 8 low out. Okay. So we pulled back into the reversal box, but bar hasn't closed yet. I don't know. Sometimes you don't get a selling. This ends up going up here and closes, then this is done. Okay, so all I know is that bar 13 is the first sell, which is never a good idea because there will be always bulls trying to fix their boo-boo. Okay, you look for a pullback at the box or inside the box, but if the pullback bars are reaching the top of the box, you're either looking for a double top lower high sell, or you're looking for a fourth push sell. But if I don't see a bear bar, I'm not selling because this could continue to go up, okay? Because some bulls are still trying to break even, and then other bulls are trying to get back up here and make their money with their original contract still. So I am not sold anything. I gotta watch that video too. Thank you, Brad. That's very cool. Oh, there's a question here. Sorry. I missed it. I did not look at it like that. Oh, that's not for me. Let me see that question. In normal day, how many points are you trying to make and how many trades do you take per day? This question, we get this question a lot. Everybody gets this question. It's your stamina. If I put it like that, all depends on how energetic I am that day and how good the price action is, really. You know what I mean? I mean, look, if the price action is good and I'm really up for it, sure, if it sets up well. But really, I actually look for swing setups. Swing setups could be double tops, double bottoms, wedge tops at the EMA, wedge bottom, okay, sometime around 11:30. If I can spot a good wedge, okay, I know some kind of a swing will set up. There are 2 swings a day. Sometimes you get 3 at the end of the day, would be the third one. So pay attention to what I'm saying. I said this many times. I actually posted a bunch of charts. You can go check them out. I think it was last week. I literally marked the swing setups. Sometime around 11:30, or as early as 10:30, you can get a good swing, okay? And then around 1:30 p.m. Eastern time, I look for. And those swings can go minimum 16 bars to 20 plus, which is hour and a half and 2 hours it could just go, which is great. If I catch that, that's great. I'm going to hold on to it. Now, if I'm scalping, I try to scalp 5 points minimum, and I try to get a 10-point move at least. I mean, ATR is telling me average bar is a 10-point move. So your scalp should be a lot more than that, 15 to 20 points. Okay? That would give you a 2-to-1 actually. So, but really that doesn't matter, but then again, I eat what I kill. And that's not, this isn't one of my original sayings. This is totally Al Brooks. This is you eat what you kill business, right? And because I have bills to pay, so to answer your question, I need to make at least 10 points a day to survive on the East Coast of the United States. I need to make 10 points every day. Okay? So if you're really looking for that kind of information, you could be living in Idaho and you can survive on a $60,000 or even $50,000, salary. There are, videos you can watch, right? You can make $100,000 a year, still survive in California, paying your health insurance out of pocket, everything, and you would still have about $10,000-$15,000 left to, take a vacation in your backyard in California. But yeah, depending on where you live, right? So, or you can live in Turkey and you make $100,000, your entire yearly spending is about $25,000. You get to keep $75,000 end of the year. Many Arabs actually move to Turkey because some of, like S&P, they cannot trade in their country, but they can trade in Turkey. And it's very cheap living there. So yeah, it all depends on, where you live. You may need 5 points. You know the story. I lived a life for 40 years. So now I punish everybody. I have 2 birthdays, 2nd and the 3rd. That's it. Okay, so look where we are. We have reached the EMA. Good for the bulls that they didn't let go. So now those who were stuck here, okay, look, this bar is high, actually breaching where they might have, bought here. So they stuck to it. So that's original entry actually made money. Now we ended up here. Good for the bulls. Do you think I'm going to sell this? Well, not yet. First of all, we breached the 50% of this wedge reversal box. I don't have a second entry sell. I might get it maybe next couple of bars because this is a 20 plus bar to the EMA. So we might get a gap bar. We might get something. If I get a reversal bar, I can still sell this. But at this point, I'm not touching this because there's also a measured move target that the bulls might be trying to get to. All I know is that they're trying to, get to this, average price. They kind of reached the average price. In fact, we now have 14, 15, 16 bars. So you take 4 bars, 1, 2, 3, 4, okay? This is no longer relevant because we have reached the average price already, and we did not sell. So the average price now becomes, I no longer need this, average price becomes the EMA. So I'm looking to see if there's a much better wedge structure because this isn't cutting. We're actually going beyond that now. Okay, so maybe 1 pullback, 2 pullback. We might make a double top and then come down. It's possible. Or is this the first pullback, second leg, second pullback, and a third leg up here? Okay, like this. So that means I will look for a reversal bar. Let's take a look at that example again. See that? Inside bar, outside bar, inside bar. Bears took out the inside bar's low, closed a bear bar. That means they're trying to take out the outside bar's low, and this one did, so you have a breakout. And L actually marked where you would sell with a stop order, and that will give you a 1-to-1 and 2-to-1. And that will be your wedge target if you're getting your targets from the structure. And that bar 10, or maybe bar 14 at this point, would be the target. But I don't have anything to sell yet, okay? So I can't sell it blindly. No, it doesn't make me twice my age if you're trying to get a number over there. No. Yes, there's a wedge there, but at this point, we have 20 bar gap testing. We have, this bar is gapping a little bit. You see it's low, it's not really touching the EMA. Bulls are trying to get a always in long because they want to maybe get up here and close the gap. I'm not ready to sell anything. This is still going. And I'm actually pretty bummed out that I had to get out here. Now, I could, if I wasn't talking, I would have actually maybe jumped in again here or here, because I still have a room. Now we have a breakout. You have a smaller structure, okay, for a, you can either take that or take that. So the bulls might be still pushing this, but I am nervous about this 20 bar gap. And we have a wedge. You can also say, take this, yep, bar 3, and that is a wedge. Okay, from there to there. Sorry, not doing a good job there. So yeah, that's a wedge, which I showed in the picture, the charts. So if you bought something and you held on to it, fine. You know, but still you need to take profit because this could still collapse. Now, I don't have an inside bar and I don't want to sell this. I would want to see bar 17 is a problem. It's not an inside bar, okay? So there's no confusion here. That means bulls are still buying. If they do close this bar bullish, then we get 2 bar reversal. I'm sorry, 2 bar always in long above the EMA. That tells me, okay, this wedge may not sell and we will continue to go up here and eventually to here. But last minute, if the bar 17 ends up closing all the way on its low, becomes a 2 bar reversal with bar 16, sure, I'll look into selling. I need confirmation because there are limit order buyers right at the breakout point right here. You see that bar 12? Bar 16 is a breakout point. We just tested that, which is 44, 45, 44.50. Actually, I'm wrong. Sorry, 45. Okay, 37.45. ATR is 9.25. Here, that's the breakout point right there. Okay, so that means ATR is 9.25. Divide 4.5. 4.5. They already scalped right around there. Okay, but this could continue to go up about 9 points, an extra tick to right there. So I'm going to wait for this bar to close. Bulls are buying the pullback of this breakout. ATR still 9.25, but there is a wedge. You can also, I was looking for inner structure, but here that's much more obvious. 1, 2, and 3. Q wave actually point that out. So I think they're pushing this a little bit further. Eleven, 10 more seconds left this bar to close. If it doesn't close bearish, they're going to keep pushing. Can we get a 3 bar reversal? That means this bar has to close down here. Then yes, they can still sell this wedge. But let's just see. I don't like this bar. It's a doji. I would like to see a good bear close. Then I would say, okay, we might come down to here. But the market is not in a hurry to sell this. Now it's 8. So adjusted. It went down 8.25 actually. I actually bought it because I want to scalp it. It's 8.50. Just leave it there. Don't touch it anymore. See if they can. I bought it here and I scalped it, and My runner is not running. But I have still time. Bulls can still reach this level. Next 2 bars. Okay. My ATR is 4. So I'm looking back 4 bars. I'm giving them a 4 bars to finish this job. ATR is 850. You can take out profit early if you're going for a 1-to-1. That means extract 1 or 2 ticks and just pay yourself early before they actually hit that 850 line. Market still wants to maybe trap those buyers. They haven't sold. Now, what do you notice here? We have bar 16 closed above EMA, but it's not consecutive bull bars, okay? But now they opened another bar above EMA, and they're trying to close it. So that's why I know they're trying to get here. But it's not consecutive bull bars. Is this still always in long? Yes, we have become always in long. A little bit shaky, but they're still trying to get to that scalp target at least. You know, ATR is still 850. So, sorry, that's not what I'm trying to do. That's it. I'm going to give them one more chance to go out and grab that 850, and I will exit out. But if it closes on its low, I'm out. I don't care for this runner to run at this point. They can still go out there. It's just that I don't like the way the second bar is a bear bar, okay? And if this bar now suddenly closes down here, especially if it tries to get beyond the 37.45, I'm not even going to let that, okay? I'm actually going to exit. I don't want it to come down to my entry price. This is a runner. I already scalped. I don't want it to come down to my entry price. This is a runner. I already scalped. They can still finish the job by reaching 850. But at this point, I'm on alert. The next pit stop is 37.55. It can actually extend there, okay, before coming down. So it would actually give you 1.5 the ATR, or even 2 times the ATR. So instead of 850, that's now 875, right? It's 16, say 17. That's 15 points, just about, I'm going to say 17, okay? Average. I always go for the 1 time the ATR. So I don't like what's happening here. But this is the 3rd bar, so there's still room. There's still time. But see how ATR just came down now? I'm out. I'm out. Close, I'm out. I don't care if it goes up. When the ATR comes down like that, that means that 850 target is now 7. Okay? You got to get out. You're done. It's telling you your original target is now, okay, kind of diminished, and it's been 3 bars. Either take your profit and leave the market and look for another setup, or hang on to it, buy when it comes down here, but it's not guaranteed. You can fix your runner. So I'm out with really good profit there, and I'm done. They can still continue. They have 4 bars to finish the job, right? So breakout, bar 1, bar 2, bar 3, you know, bar 4 could still go up, but it's going to have to do it without me because I am not taking a chance. I bought the pullback. This should have been a bull bar. And I got a little bit nervous there, and I explained it's because this always in long is a very shaky one. It's not really telling me, screaming that they're going to want to go up here and close the gap and get to the, you know, measured move target. I didn't even like this pullback too much, okay? But it's not too much, so I don't need to worry about that. Now, there's another, like that's where they're trying to go. See, the bulls are still trying to finish the job. Some of them might have actually built down here to push it further up so it would meet the target. To me, it's done. But now, if we do get the second bar, now you have 2 consecutive bars closing above EMA. If they can close this bar bullish with a bull body, not only it opened above the EMA, it's also closing. Now we become bullish. That means 2 times the ATR could be target. So, you know, 37.55 is where they're trying to reach. But will they be able to close this bar? 17 is bullish and get an 18 bar continuation for bulls. I don't know. This area is magnet. Bears want a bears want a wedge top bear flag and they want to sell. On a wedge top bear flag and they want to sell. If this bar suddenly becomes a outside down bar and engulfs the bar 18, that could be a reversal. So let me measure again. They both here. Now check that out. If I didn't get out of my scalp, okay, the last final runner, look, 850. That's kind of, it's actually a lot more than 850. Look. It's 1 tick more, I think. Hold on, maybe I'm wrong. No, it's not 1 tick more. So it's exactly 850. That was very accurate. That was the original plan. So now they're done. So the bears now, so these bulls are getting out because machine scalp, and the bears are trying to, you know, have an engulfing bar. But look what just happened there. That is not an, it is actually an engulfing bar, okay? Because its low is exactly the same as bar 18 low, but its high is higher. That makes it an engulfing bear bar. But we are above the breakout test area. Now, this is to me a 2-bar reversal. So this could actually move underneath here. See how that worked out? First entry short. We moved under the EMA. Bulls are still looking for some kind of high one if they're counting from this high. But it's a wedge. I'm going to remove this. I'm not interested in that because it's a wedge and we might be coming down here. Now, take a look at the higher time frame. The only problem for bears here is that we already reached this. We bounced. Now, it's a pin bar, okay? The pin bars are not reliable. We could come down and test the 50% of that pin bar before even finding a buyer, or 66% pullback. We already did 66% pullback and they bounced, but if there are no buyers here, we could continue to come down to the 50%. So that would result in a quick swing. Now look at these 15-minute charts. Globex chart, we have an engulfing bar. There's still 1 minute and 10 seconds for this bar to close. If they close it like that on its low with a smaller wick, it's got an upper wick and it's got a lower wick, which is not a good thing for bears. As long as they keep this body down here, closer to the open of prior bar, that becomes a reversal. And we could come down, okay? Because after all, this is a leg one, pullback leg two. Now, if the bears get 3 bear bars, that's a good momentum. All of them closing on their lows. We could go sideways and a second leg down. That's because bar 14 low is where, or the open of bar 14 is where bears want to go down and test, okay? Now, so for, where are we? That's a 15 point. Where's the 20 point? Which is right there. So 19 to 20 point, we could come down and test this area. Could be 1 point above, but these 15 point scalpers they need to take profit. So it could go up a little bit. That will be the sideways bar before coming down and finishing the job. So bears done a terrific job here, pushing the price 5 points, then 10 points, scalping. It bounced right there. That's profit taken, bar 21 high. Then it continues to come down another 5 points to 15 point. Now it's trying to probably go to the 20 point. So 20 point is a half a trend. It's basically a swing. In between the 20 and the price, there is pit stop, 37.35. So we're coming down from above. We're probably going to bounce there, but because ATR is now 7, we could just overshoot it 1 or 2 tick and still meet around 19 points. So if the 20 point is at 33.75, we could actually test 34.75. All right, so very good. My target just met. ATR is very healthy, so it can push and give me the full target 20 if it wants to, but I already scalped, so. So if you notice the wedge, if you notice the debacle here, not being able to get 2 consecutive bull bars above the EMA closing, one of them completely supposed to be above, which is bar 18, nice. But in between, there is a bear bar. It's a 20 plus bar gap to the EMA. There are sellers there. I'm looking for some kind of, I was looking for this. I was looking for a bull bar and a bear bar. All right, so, and then bears closing somewhere down here and then breaking down. We didn't get that. So then I warned you guys, if that's not the case, then I'm looking for a 2-bar reversal. And we got that, bar 19. So you could have put a sell order right underneath that stop above. Okay. First sell, it's small, but they tried. And a second entry. So if I sold there, that would be my 1-to-1. So you could have taken your 1-to-1. And then if you measure the way that I measured, you would have a, hey, let's have a runner, see if we can reach Rose's 20 point. Because ATR is very healthy, it's probably going to push towards there. And look at it. So you can go with a risk reward or you can point count. Either or, you can maximize your, okay, profit taking. So that was nice. Is profit taking. So that was nice. and they're taking profit right at the 20, and they're taking profit right at the 20. Three bear bars, pull back. Can they continue down? Well, the wedge formation target is down here, but you're selling against 1, 2, 3, 4 bull bar channel. Okay, so I also want to measure something and see how much we pull back from the high. Look where we are, 66% pullback. We dipped a little bit, but we're bound to bounce. Now, can we come down to the 50% pullback? Sure, we could, if this is just a pullback and we get another leg down. But the only problem here, there are limit order buyers waiting here. They try to sell, failed, and then they bought it. So somewhere here, okay, above bar 14, buyers are waiting, limit order buyers, right? So you have this going on. When it comes back down, where the bears failed, bulls took over, okay, we're going to bounce again. So 22 is not only 20 point profit taken, happens to be above the 14. Also 1-to-1 target met for those who sold underneath bar 19 with a small risk above. Okay, so you wait for this pullback to be over. If you want to see second try, that means your wedge target, okay, wedge pullback target, but you need to see some kind of a bear bar closing to enter. Without seeing that, I will not be interested, because we could go up and make a double top or double top lower high and then sell around here rather than here. So you have to wait for bar to close. But 3 bear bars, good momentum. This is a pullback. There could be limit order sellers above that bar, which there were. They're selling, some selling here. And let's see if they can give us a second leg to the bar 14 low. Now, if this bar closes bearish, stop order bears will immediately, okay, just trail their stop order underneath that bar, hoping to get filled with the next bar. Grab a 1 or 2 point or half the ATR and leave a runner. So everybody's waiting for this bar to close. If they see a bear bar closing, those stop orders resting down here will be immediately dropped 1 tick underneath that bar's low, just like I explained yesterday. Because 3 bars create momentum, and they might want their second leg down. And if they don't get filled and the bull bars show up and it just goes up, that means you didn't get filled and you were wrong, and bulls are not done yet. We might end up getting a double top here at the EMA and then sell. That's fine. That's the beauty of trying to enter with stop orders. If they're not ready to sell, they don't fill you. So you're in no danger. But if you actually park underneath a bull bar, then they can not only fill you and then reverse back up. That's the danger. Just like I explained yesterday at the end of the session, after the close, we went over those. So it is up to you to make that decision where you want to trail your stop order. If you study the charts, go back in time, okay? Just look at the 5-minute charts and pretend that you are, okay, selling, buying, selling, whatever, right? If I park here, I get filled there and it goes up, I'm upset, okay? But if I park here, they fill me and it goes down, I'm happy. Okay, so think about that. If I leave it here they come down and they fill me and they go up. But if I actually trail it up here, they fill me, I grab a couple of points, and then my runner runs towards those support wick area, I can still exit out with extended profit. Okay, look, if I park here, I get filled and it goes up, I'm upset. Okay, if I park here, I get filled as early with a small risk and I'm down, going down. Okay, there it is. Look, if you actually move that stop order right underneath, you got filled. And you probably even scalped 2 points there, although I don't know, you can measure it. Let's see, if you entered right here, that's 36, needs to come to 34, even 33.75 to give you a full two point scalp. So you entered here, 36.25, I'm sorry. 34.25 is your 2 point. It needs to come down to 34.2. But if you're going for a 1 point, ATR is significantly down. Okay, so that means your initial scalp should be a 1 point. And the rest is, okay, a runner. And this is the second leg. So you're able to make that point, maybe even more, 1.5. It actually came down to 34.50, but it didn't hit 34.25. That was 2 points if you were trying. But anybody who was going for a 1 point scalp, they got it. And then it just reversed. Now, why is it reversing? Well, I explained why it could happen. Market is up. We're above open of the day, so that makes us bullish. We're up now. Yes, we're down. Overall is bearish. But look, they tried to sell. They failed, and the market became bullish. 2 bars. Buyers probably here. Buyers probably there. Buyers above 14. Now, buyers are trying to get a double bottom. I don't like it. I don't like it one bit. If I actually sold here and I took point or 1.5 because ATR at that time was around 6, I still make money, but I'm upset because if my stop is here, okay, on that lower high, and I don't have, it shouldn't be there. It should be here, first of all. So I'm trying to go down here to this level, maybe even here. I'm nervous because I don't like this double bottom and a second leg underneath the EMA trap. So I can make a decision. I can wait for this bar to close, okay? I can lower that stop here in case if they surge, okay, they can just kick me out. I would lose very little. Or I could just wait. If they do actually print a bear bar underneath this 22, that means they made a new low. We're still in the second leg. I don't have to worry about it. We're probably going to come down to the open of the day, breach below it, test the 14 low. So you got to be patient. You got to wait. I don't like what's going on there, but it's part of the trading. You're entered into short. Your job is to grab that 1 point no matter what, or 2 points. But in order to get that 2 point, price needs to test 37.34. If they close beyond 37.34, a bear bar, then all those stops are going to move above right there. Okay? Then we have a potential of swinging further down. So you can't just put a stop above 23 thinking, hey, that's a lower high. No, it's not a lower high just yet. It's not. Because we did not breach this low with a bear body. Your stop should be up here. Bulls want to trap that second leg with a double bottom 22 and go right back up. But bears are trying to breach that because bar 14 low is their wedge target, wedge reversal target. That's it. Bears made actually a 2 point. So now their runner is running, but this bar hasn't closed yet. There's still 25 seconds. If they do close this bar bearish enough, then you're going to be in a swing and you can move your stop up here. Okay, so they closed it right at the same level, but it's not a good double bottom, is it? It's not. This can't be a double bottom. It's a strong close, bar 24. And a 2-bar reversal I talked about on the 15-minute chart. I said this is probably going to sell. And that's what they're doing. Can the bulls actually show up here? Sure, they can. They're still trying to trap the bears, but I think this is just a preemptive, try here. I don't think they're going to be able to. See, it's still trying to come down to the 14, either open, bull body, or the 14 low. And there it is, your second leg. 3 bars down and 3 bars down. So I said this is probably going to go sideways a couple of bars before coming down for the second leg, and that's doing it. And all because you have a pin bar, okay? And pin bars are very unreliable bars. Chances are they're going to want to come down and test the 50% of this pin bar before buying. We're already at the third. They already pulled back and tested the 66%. So if you divide this range into 3 sections, and then the 50 right here, they already tested, but they moved underneath the first section, second section, and a third section, right? So in between is a 50%. Buyers might be here. So until they reach that, they're going to keep selling. There it is, 14. So if you sold here, that's a great job. Okay. Say you put your stop there. Look where we are. We're at the 2-to-1. So we're at the 2-to-1 right now. Happens to be below the open of the day. Happens to be the wedge structure target, 14. We could bounce now. They haven't started to take profit at the 2-to-1. But it's this area is that 50% pullback is I'm interested. Now I'm going to look at the Globex. What's going on here? Okay. Look, bearish bulls tried it, failing. So what do you think is going to happen? It could come down here. And if we do go up, that's a failed breakout for bulls, or even a try. We can even sell further. Just like what we had here. Same thing, right? And there's also head and shoulders, neckline. They broke the neckline. That's a terrible, good to better jump there. So here we go. Neckline. They broke the neckline, and look what they just did. I'm not a pattern trader. No, I used to be. Not anymore. But I will recognize. And recognizing the pattern is one thing. Knowing how to trade it is another. So the neckline broke, and they came back and retested the neckline, and now they're selling. So this could be the last leg. So be careful. If you're trying to sell this, you could get stuck. Because head and shoulder patterns are actually bullish patterns, believe it or not. What does that mean? When you're ready to sell it, market is actually getting ready to take profit and turn it around. They trap you. This is why I hate the head and shoulder patterns. People love it, but they think, oh yeah, we're just going to sell it. You might sell it and make a couple of points while the market is getting ready to trap you and go right back up. So where you sell is important. It's the second leg. A lot of objectives have met, right? So there is a gap here. There is a bullish gap. The bears are trying to close that gap. So they're coming down, and they want to overlap with bar 8 body. So they want to reach here. That is also the 3-to-1, okay? But really, they might be wanting to come up and test the bar 6 high. So they're in a still swing, but this 2-to-1 needs to take profit. So everybody who sold the close of that bar are like, what is happening? Why is this bar going up? Well, I'll just explain to you, because you're entering too low. You can put a self-stop order underneath that bar 25 and wait to see if they are still bearish and want to sell. they can sweep you away, okay, with a bare body before they test the 3-to-1, okay? If they really want to close that gap, that means they need a bare body overlapping with that bar. If bulls want to keep that gap open, that's it. They can buy here and you will be stuck. So try to remember that head and shoulder patterns are nothing but trap. And what L says that every pattern fails, right? It's bound to fail. So you have a flag here, bear flag. So they might just actually go up and get another flag and then sell from there instead. So now we need a wedge. First leg, pull back, second leg, we're going up. We might make a third leg. Down. Bears on the higher time frame trying to reach here. I want to buy here. There's a gap here. Are they testing that gap? Not yet. There's also a channel here. Take that, or I can take that. I'm going to take this. Okay. Now, if we do reach somehow up here, there are probably sellers waiting to sell again. Now, this is not a good representation because I left out a lot. I think this is a lot better. So you see how they're stuck now? Everybody who sold market sell of 25. This was the target. We went below that. We filled everybody's exit order. Not only that, we also ran stops. These bulls got stops there and they couldn't defend it. So we ran those stops with this bar's lower wick and it bounced pretty high. So the bulls actually want to keep going up. But we don't have a 3 push down yet. So 1, pull back, 2, pull back. We need the 3rd push, so we might still come down. So we need another flag. Now, could this be a start of a swing? Let me get rid of this. It's also a 50% pullback. It's bouncing. Sorry, that's not what I'm trying to do like that. So what if the bulls actually show up here? Well, here's my problem with those bulls. Market was very bearish. This is wedge reversal, okay? Even if we go up, if we make a lower high of some sort, okay, that's wedge, lower high, we could still continue to sell. So if bulls cannot show me strong bull bars closing above EMA, okay, maybe a quick pullback and then buy that first bear bar, more bull bars, I'm not interested. But they might be trying to set up some kind of a small pullback bull trend. We were expecting that and that didn't really happen. And could we get this? Sure. We would get something to go up here. That is a very nice bar, but is it good enough to buy? We're still below the EMA. We're still not always in long. So we need much better bull bars, at least 2, 3. But 26 is a really nice bar. Now they need a continuation, 2, 3. But 26 is a really nice bar. Now they need a continuation. But the bears are looking for a double top lower high and then swing it down further. Now this hour, we actually tested the prior hour's low. Now if the bulls actually take out that midpoint, which they are, the last hour's midpoint is right around here. That's what they're trying to do. Maybe they're not. there all the way because I can't really tell. Let me see. Yep, okay. So they have not yet reached the last hour's midpoint, okay? What they want is they want to take it out and they want to keep going up. So that means I need to see strong bull bars. We could close this gap still. If they do close this bar bullish, then yes, we can continue to go up to right here, to that sell zone. But if the midpoint holds these bulls down, which is 41, 37.41 is right here. Look at that, right at the EMA. Right at the 20 EMA on 5-minute chart. If there are bears here, they could still push this down, okay? So I'm going to see how we do here. This is young, okay? This hour, this bar is young. If we cannot get above that midpoint of prior hour, we could continue to sell, okay? We couldn't even reach that yet. And that happens to be this right here, 41, 37.41. Struggle. I like this bar 26, but it's just a one bar. And these kind of bars could be designed to trap these buyers, okay? Well, first trap them out, just, run their stop so they're upset. And sellers who sold the close are stuck. So now both sides of the market upset. Everybody becomes bullish only to come down, okay? So basically this could end up being a fake order to trap everybody, upset them for the second time to create huge bear bars to the downside. Market makers love to throw money out like that because there's no other way to create a frenzy or stronger impulsive moves up or down. They have to spend money to attract you. Okay? So that bar could not get a continuation bull bar. So now you have a bull leg after a cycle, bear cycle ended. You have a bull leg, pull back, and the bulls are trying to get a second leg up in hopes of closing above the EMA. If they do that, that's good for them. But that will be a second leg up, okay? Now, you're buying into what seems like a trading range right there. Are they going to be able to close this bar now above the EMA? And will they be able to open another bull bar to turn the market into always and long? I'm still watching. I am not buying this. Okay? Now I'm also watching what this hour is trying to do. I will get a decision once I see these bulls are actually trying to go further up. In fact, they could actually go further up to 37.50, maybe even 37.60, but they have to show me and not fail here. Because bears might be looking to swing this yet again to the downside, and I don't want to be stuck in that if I buy here. There's for these bulls done such an amazing job. If you actually measure from this pivot level, they're trying to get to the 20-point zone. They might test somewhere between 19 and 20, so I'm going to leave it right at the 20. Okay. That's where they're trying to reach, but I didn't buy it. It's just you're trying to buy underneath the EMA. There's no room, and they can slap you down here, and I don't want to deal with that. Could this be a bull flag? Well, where is the third leg? If this is a wedge bull flag, where's the third leg? Is this a double bottom right here, 25 and 26? Sure, but then they need to close strong bull bars above the EMA to get to the prior high. I don't see that yet either, so it's very difficult. All I see is that if I buy, I'm buying into this small structure high, and there are probably, I said, sellers are waiting. And look what just happened with that bars high. So they can last second close this bar on its high above the EMA. That would be good for bulls if they can do that. That means they're trying to show us that they're trying to turn the market always in long, but I don't see it. So anybody who bought 26 above, disappointed. Okay, so they might have both down here again to fix it, and they might be exiting out. And if that's the case, that means there are no bulls anymore. This can come down. Yeah, this could be another head and shoulders, much bigger, left shoulder head and a right shoulder. So then you would have your neckline. Yeah, so these guys who bought above 26 or the close bought again, fixed their boo-boo, and it might be just coming down. I don't know. I mean, there's still 10 seconds, but you think in 10 seconds this is going to go up and close here? I doubt it. Bears need a bear flag above the EMA, some kind of double top to make a lower high. That looks like a good lower high, but the bar is a bull close. That's another level of complexity. Wish it was a bear bar, but they closed it bullish. So now you need a second entry short, right? So bar 29 needs to close bearish enough to sell. I don't see it. I'm probably not going to touch it. Because, right, if you put a line here, let me get rid of this. You should have the 20 point on your chart. From left shoulder to the right shoulder. This is still a valid form of head and shoulders. Okay, if you want to sell, you need to sell around here. Okay, so, but if the bulls actually break this and close a bull bar, this is no longer a head and shoulders. Bears are trying to get a bear body so they can sell into the neckline. See, now you understand why I didn't want to buy. Why I was like so iffy about that bar 26. Yeah, that's nice. But that right there is a money thrown out the window to attract you and eat you alive. So now can this go up? Hey, I mean, if the bulls want a bull flag and want to go up and challenge this line, sure, they can do that. But they're going to have to show me. All I know is that there is a bear flag now. They're trying to take out these lows, come back down here possibly, and get a bear flag breakout and go further down. Okay. They might be swinging this down again, so we'll see. If the Globex low holds, then bulls can still, go back up, because bulls see a bull flag, double bottom, bull flag, okay? But if we take out these lows, okay, we can come down here and then we would make a wedge. So we come down here and then we would go up and then we could swing up. So it hasn't set up yet. Bears want to take out that double bottom. So if I wanted to sell it, I would have my sell order underneath 27 probably, not 28. Although 28 is still sellable, but it's a bull close. Okay, no one's going to buy that. So you could take a chance and maybe put your stop order sell right under, one tick under. It would only give you a couple of ticks advantage. But I'll keep it under the bear bar. And I would get filled. I would scalp a point or a point and a half, whatever. Or 2 points, I don't know. Say I sold right here, okay? One tick underneath the 27. That's 33.25. I would get filled. In order to make it 2 points, it has to go down to 33. Yeah, we already did that. No, wait. Yep. So these bears actually made 2 points. So they're making money. Anytime they scalp at 2 points rather than 1 point, that says something. They're making money. Bulls scramble to get out. Those who actually wanted to scalp half the ATR, they made money. It came all the way down. That was their 3.5 points, and it just quickly went up. It's because many machines took half that ATR right there. That's why that body is still jumping up and down. Those are the ATR scalpers, but they only scalp half the ATR. So this could still make full ATR. At this point, you're in your runner, okay? You already scalped. Remember, S&P's profit is 1 point always. Because ATR is so large, people go for 1.5, 2 point. It's not like the old days, ATR was 3 point. We called it an amazing volatility. Not anymore. It's not even 5. If it's 5 is like the old 1.5. You know, those are days it would go, oh my gosh, it's so slow. But now, look, 577, that's the old 1.5, 2. So everybody who was old machines going for 1 point in the day, now they're going for 2 points. So they should actually change that statement and say S&P's profit, you know, traders' profit is now minimum 2 points, not 1. But that's me saying that. That's where it comes from. 1 point versus 2 point because of the ATR, I believe. So, see, and then we get these people like Irfan over here. How do you trade 3 ATR? Well, it used to be like 0.75. It would go down to 0.7. Hey, great, you can actually scalp 2 ticks. So imagine, you know, people loading off with, when the ATR, how do you trade? That's actually a good question, and I'm glad he asked, even though I am bullying him over here. But he's actually asking a good question, because when the ATR is down, okay, you can take a bigger risk because it's going to go slow. All right, so you can, bigger risk meaning you can load up your contract size. When the ATR goes beyond 5, say 5 or 6 point, or beyond 3 point, you have to lower your contract size, okay, to maybe 1 or 2. That's it. But when the ATR is low, then you can go with like, you know, say if you're micros, so 5, 10 contracts, whatever, right? Because ATR is saying, listen, you're not going to go too far. You have only a couple of ticks or a point scalp here. You're not going to make money if you are trading with 1 contract, right? Machines know that. So they load up on the contract, they go for 3 ticks, 1 point, whatever, and then they scalp out big. That's how it's done. But you have to think of your own risk, and you have to go according to what your account offers, okay? So thank you for asking that question. But that tells me you haven't been in the market too long. When did you start trading, Irfan? When did you start trading S&P? I have a guess, but I want to hear. You must be new. That tells me right there I was right. Because if you said, you know, even back into 2017-18, ATR3 was a great deal. You know, that's when the volatility started to come in the market. It goes to 5. Oh my gosh, news hour, it would go to 5. That's excellent. You know, that's big numbers. 4 months, I mean, ATR news, when the news bars start to, you know, print, we get about 20 points, 4 times what it was before. So now I get it. Well, that's good. So now you know the difference. But price action is price action, regardless. Okay? So now we have down on this, up on this, down on this, up on this. We might come down a little bit, perhaps. because there is some kind of a structure there. The bulls are trying to get a bull flag. Down, up, down, up. We might come down again. If you cannot see what I'm seeing or counting, go to 2-minute chart. Down on this, up on this, down on this, up on this. We need another bar. Maybe make a double bottom with 74 before buying. If this is no longer a head and shoulders. So this is probably going to come down to make the third push. Now, if you actually point counting, right? So we know the bulls actually made a lot more than 10 points. So you would start the count here. If you start the count there, or something. If you start the count there, that's a strong sell, okay? Because the bar closed here, so I can take that as a sell bar, okay? So if you actually measure here, look what you're going to see here. Why are we bouncing here? Happens to be 14 points. It's the center of take profit zone, 15 point. But I don't think they're done. Like I said, we need another push down, and that's what they're going to get. Now, that could end right at where the bar 30 is, or 30 low is. If bulls really want to trap the bears trying to sell here, they can make a micro double bottom and reverse the market. But the bears want to come down to this neckline if they are seeing the possible structure. And this is the lower high anyway. So they're trying to take out that low first and then come all the way down to here. But it's not that strong. I don't like, you see, right there, 30, 31. What did I say? If bulls are going to prevent this, they're going to want to try to put some kind of a micro double, I said. So be careful. But did we get our third push down? Yep, that is the third push. Now, if they do close this bar now strong, their buyers one tick above bar 30. They're going to enter with a stop order. They already entered. They're triggered now with bar 31. They're going to try to scalp maybe at the EMA. And ultimately, they want to go see and eliminate this bar 28 high and get above it and completely demolish, okay, this head and shoulders pattern. Who everybody sold with bar 29 are upset right now because I said these are designed to trap you until it sells, breaks out, or completely invalidates and this turns into a bull flag. We have now a double bottom spike, double bottom or wedge bottom, whatever you call it. This could be a wedge bottom, truncated, okay? It could still become a bull flag. But in order for it to become a full-blown bull flag, bulls need to close a bull bar above it and stay above it and open a new one, take out that high, then we're going up here. So bulls are still not out of the woods, but they're trying. And the first sign, let me get rid of this. The first sign was that micro double bottom. Now you see it, how I read. Everything's in the bars. I've tried everything. I've tried, maybe not everything, but majority of, I started with market structure. I started with, I don't know, alerts. I paid a bunch of companies send me these levels. I would slap them onto the chart. I just could not find success until I started to count points, understand how these bars truly open and close. I don't look at anything anymore. I have become successful until I learned the patterns on the 5-minute chart, RTH 5-minute, nothing else. And that I owe it to Al Brooks. So I'm able to help myself, help my family, and this is truly my experience. I still combine what I learned, okay, but I also learned every pattern will, okay, fail. And Al Brooks taught me that if they actually go above this level, that's it. This is done. every wedge creates a head and shoulder patterns, okay? But those patterns can fail. And he told me, and told other people too, because I watched them in his webinars, once we close above it, now we have a bull flag. You know, do what you want, but if you want to be consistent, learn how to read the bars. Everything is in the bars. It keeps me out of bad trades, okay? And, you know, helps me be on the right side. Can they still sell? Sure, they can still sell, but look what happened here. Now, if you learn, like I did in the beginning, fancy, you know, combos, candlestick combos that they throw at you, they send you these background, I don't know, screensavers. They give you this, oh, look at this is a combo, this is another combo. There are like 99 kinds of them. You could just slap it on your, you know, as a screensaver, and they never work. But one or two might work, and it could help you, such as this. You got a bull bar, and you got 3 or 4 inside bar failure, and then you get this bull bar. Now, normally, you would expect market to break out and go. Sometimes you don't get it. Sometimes suddenly you get this big bear bar. Now, did it work? Well, it's open to debate. But you see, bears failed to sell. Now the bulls took over, so that's probably going to go higher. Where is it going to go? To the prior high, 28 high, and that 37.45. So that's what the bulls are trying to go, and that's it. And if they do close above it, they would invalidate, and then they would start to maybe that 1 or 2 hour small pullback bull trend with about 16, 20 bars all the way to 130. So somewhere around 130, we might go up here only to come back down. Who knows? That would be maybe 1, 2, and 3 wedge, and then we would come down. That would be the pattern, possibly, for bears. All right, so now we have 31 above the EMA. What do we need? We need bulls to not give in here and print a good solid bull bar above the EMA, consecutive 2 bull bars. If they give in here, then the bears are going to see double top, okay, above the EMA, failure to close above this right here, then they still have a chance to sell this and trap the bulls who were trying to buy, okay, at the highs of this trading range. I still haven't bought anything. They could trap me any second here. You're forced to buy high with the 31 again, and I don't see a second consecutive bull bar. They failed here. They couldn't even close one here. So how is this any different than these? That's good that they have 30 and 31. Now 31 is a good bar. I like that. I like the fact that they have printed that. But it needs continuation. So let's just wait, bar 32, okay, to finish printing. So I can't be upset with it just because it's looking like a bear bar. It's not a bear bar yet, right? We don't know that. There is still 1 minute for this bar to close. They can close it bullish last second, and that would be your always in long signal. What time is it? Oh, okay. So it is noon 09. And I'll just stick around a little bit. But no, wait a minute. I can't stick around. I think Brad wants to come in, so I'll go now. I'm going to leave the webinar open, and he'll be in shortly, okay? So, but I'll be in Discord I'll probably spend some time more in my own Discord, but I'll be back here and probably post under the ES analysis. Okay, so you can look over there. So here comes Rod. Stick around. Stick around, everybody. All right, bye. Tomorrow I'll see you guys in the morning.
Thanks, Rose, as always, for the webinar discussion. So one thing I want to elaborate on that Rose was talking about, 31 outside up bar. It's a big bar, big risk, and it's reasonable to buy above the bar, betting on a double bottom and a rally in second leg up. The problem with it is that you are still in a fairly tight trading range, and that does lower the probability. One moment. I had to update something on my other computer. There's a little bit of lag, but it's reasonable to buy, and you do have to be aware, though, that it may not go straight up, and it's a swing trade. It's always in long, probably above the bar. Bears probably get out, although most bears should get out somewhere in here. This follow through is bad, and if you notice, I'm going to see if I can pull this up on a 1 minute chart. Bar 32, that's not really worth looking at, but bar 32 was a bear bar closing on its low for some time, and then I believe in the final couple seconds of the bar, it reversed up and closed as a doji, and traders bought it. So overall, with this day structure, the first thing I would point out is the daily chart. So on the blog, I said that this bar yesterday was a really big bear bar, and the odds favor bad follow through today. In a trading range, you often get really strong looking breakout bars that have bad follow through. I think this bar alone is strong enough for at least a second leg down. So even if today's a bull bar closing on its high, I think it's still a low probability buy, and the odds favor sellers somewhere above. This bar trapped traders. It trapped bulls. You also have bears trapped as well. Now, the issue with the bears is risk. Most bears don't want to sell all the way down here and put a stop up here because they know they can probably sell on a pullback. You know, if you think about it, if you sell right here, stop up here, that's 50%. The market could easily pull back somewhere up in here and still get a second leg down. And also traders want to see the follow through. I still think it's reasonable because of this bar and this being a wedge, 1, 2, 3, or 1, 2, and 3. I think it's reasonable the market will have to get down to the September 21st low, which is also the June low. So no surprise there. And even if it does, we'll still probably get to 4,000 big round number. One thing to think about that Al has mentioned a few times is it's still possible that we will get there eventually, but we may have to test this trend line. So if we get a measured move down on the daily chart, from here to here, this takes you to around 3,100. And as you can see, just 30.78, so just under 3,100. And that's a measured move from the double top, September 21st to here, projecting down. It's possible that happens. If that was to happen, that would take the market to about this price level right here. Let's just call it 3,100 to keep it simple. If we did that and went sideways for a few bars, that could take us to the trend line. So you have to think about that being a possibility. As far as the 5-minute chart goes, we had a very strong sell-off at the end of yesterday and climactic, so 75% chance that you get sideways trading on the open. So even though here, and the market's rallying, I think we're going to get to yesterday's close, by the way, and this will be leg 1, pullback, leg 2. And actually, I did buy here on the way up. I was disappointed by this bar and actually got out as this bar was starting to stall. but I think it's reasonable to be long anywhere. So buy above here, traders can buy here, stop down here, betting on the second leg up. As far as this sell-off on the open, 4 and 5, it is sell to close, but the problem with it is you're far away from the moving average, this makes it almost more buy the close than sell to close. So if you're selling down here, you have to think about risk reward, and ideally it's better to exit a couple points, maybe 5 points above the bear bar. Certainly get out as this bar is going up. So we're testing the high of bar 18, the high close. That's partially why we sold off a little bit. The bulls, as Rose mentioned, we had a head and shoulders top, left shoulder, head, right shoulder. The right shoulder is kind of the double bottom, 23 and 28. And we broke above it right here. And now we're breaking to the upside. So I do think it's always in long, probably going to the 81 high. And if this bar closes on its high, it's probably by the close, betting on higher prices. But you're buying at the top of the trading range. You have to be careful you have to be quick to make decisions. And by the way, even though I have all these charts up here, when I trade, I really just have a 5-minute chart. And sometimes on my other computer, sometimes I'll use this screen, but on my other computer, right now, I really just have the open of the day's line just to remind myself that the open's there. And I bring that up because you really don't need all sorts of charts. It's having the daily chart. Is it helpful to give you, if you know that the daily chart had a big bear bar and the odds favor bad follow through, that can help you with getting you a bullish bias on the open. But you don't need this 15-minute chart here, 60-minute chart here, weekly chart here. You don't need all that. It's great to talk about it, but as far as trading the 5-minute chart, you really just need the 5-minute chart. And I bring that up because people always talk about multiple time frames or trading a smaller time frame, and I really think people will do really well if they just focus on one time frame and keep it really simple. And because I used to be that way a lot, looking at multiple time frames, trying to look at several markets at the same time. And the more you trade, especially if you can trade small and scale in and allow yourself to scalp when the market is in a trading range, the better equipped you are, I think, to make more money with just one market. So it looks like this bar is going to close, and looks like it's going to close on its high. It's a micro channel, probably by the close, and going at least a little higher. Trying to adjust a few things. So I don't think it's worth being short here. I think the option is either long or flat. If you're long, you're betting on a breakout above bar 19 and the test of the 81 close, which is also the low of yesterday. I'm actually going to put it right here. So micro channel. Is this 2 legs up in a trading range? Sure. Leg 1 to 28, pull back, leg 2 to 34. Leg 1 to 32, pull back, leg 2 to 34. It is, but the problem is there's an obvious magnet above. And, just look at the daily chart. We're probably going to close this gap for the simple fact that most gaps close. And if you look at a 10-minute chart, this is what it looks like. And, by the way, another thing about time frames, the more you look at charts, the easier it becomes to be able to imagine what other time frames look like. So you don't have to go to a 15-minute chart to understand what that may look like. The more you look at a 5-minute, the better you can, it just becomes easier to imagine things as far as what it looks like, what a 60-minute chart would look like, or what you get it. So anyways, for the bears, they want you call it a double top with 19. maybe a second entry short with 32. The only issue the bears have is a micro channel, and that lowers the probability for the bears, but it is the top of the trading range, and it's possible the bears get a bear bar closing on its low and to sell off to down here. Now, if the bears are really lucky, they get this double top with 19, break below the neckline, bar 25, and measure move to the low of the day. Low probability. So let's see how this bar closes. All right, I'm back. So we had a breakout, bad follow through as expected. Bears tried to get a second entry short, but tight bear channel, and they got a 50% pullback. And bulls, this bar closed a little bit of tail, and the bulls immediately bought it. And it also tested the 31 close. This happens a lot. This is a very classic. Traders want to buy, betting that we get an upside breakout, but the challenge they have is you're buying right at the top of the trading range, so it's very common for the market to pull back first. And it's one of those, I kind of like to think of it as kind of like a FOMO, where right here, if you wait to buy, you risk missing the move. If you just go straight up and close up here. If you wait, you risk missing the move. Now, if you buy, you risk having a fairly deep pullback. So we're at the target, 3 pushes, 1, 2, 3, might be sellers up here. Micro channel, and also on 40. 40 was a bad looking sell signal. It's bad follow through for the 39 breakout, but it's a small doji, and that increased the odds of buyers at the close of 40. And that's why when you look at the low buyers at the close of 40 and on the open of 41, that's why when you look at the open of bar 41, you notice how there's no tail. As soon as this bar closed, traders bought the close and the market went straight up. So probably getting to the close of yesterday and the low, purple line at a minimum, and we could go higher than that. There's the measured move target of, whoops, give me 1 second here. I have a keyboard that's connected to 2 computers, and I can toggle back and forth, so I've got to be a little careful which one I'm on. But we have a measured move projection of here to the open of the day, gets us up to the 81 low. So I do think we're going to get to this purple line. So tail above the bar, but still closed far above the midpoint, so that's good for the bulls. Probably, it's still probably by the close. The follow through on 40 was bad. Therefore, so 39 will break out, 40 bad follow through, 41 breakout. You have to wonder what 42 is going to look like. 42 could easily have a bad looking, it could have a bad follow through bar, and remind traders that we're still in the trading range. With the target being above, I don't think many traders are going to sell right here. It's a micro channel, 4 bars, and we're so close to this magnet, I don't think we're going to be able to escape the gravitational pull. Support and resistance, it's often a magnet where, kind of like right here. On 22, the market came close to the open of the day, this green line, and it started to pull back, but it did not get close enough to the target, so traders sold, betting that the market would have to test lower. That happens a lot. 1 second here. You do have to wonder, though, where are the consecutive bull bars? This right here, bar 39 and 40, is a reminder that this day is probably going to be a trading range day. And right now, on the daily chart, it looks like a really strong day for the bulls, closing on a tie. I question what the day is going to look like, though. Is it going to remain this way? I think the odds are low that we break to the upside, and let me restate that. I think the odds are low that we're going to close on the high today. I think, if I had to guess, we're going to close somewhere down in here. Still too early to sell though. You have a breakout above the double top, 19 and 34. So it's possible. Bulls want to measure move up. It's possible they get that. But for me, I need to see another strong bull bar. It's also becoming climactic. 3 pushes, 1, 2, 3. I'm going to go ahead and draw that just to remind, more of as a mental reminder. Although this right here probably reset the count. First push, pull back, second push. I still think it's trying to form a wedge. Now we're 3 minutes into the bar, really 4 minutes into the bar. We ain't got anywhere. You have to ask yourself, why are we not going anywhere? That's a sign. You have to ask yourself, why are traders not buying up here? So it's possible we have to pull back. As far as the 60-minute moving average, yes, and Rose makes a good point. We're 19 points above, so there's profit taking up here. And this would be a pretty common scenario where you get a sell signal here just under the target, where it makes traders question. It traps traders. Everybody expects we're going up here, but we may have to pull back first. And if we have to pull back first, it'll make traders decide, do they get out and look to buy lower, or do they stay, betting the market goes up to here? Well, I was long, and sorry about that, I actually just got out. One of those moments where whenever you're in a position and either something happens or maybe you can't be as focused as you want to be, it's often better to get out. Get out, reduce your distractions, and look for the next trade. And part of that reason is I do think we're going to here, but I don't like this 2 legs up, 3 pushes here, and also nested with 3 larger pushes, 1, 2, 3. So my traders can also put their stop 1 tick below the bar, and they get out of the trade if the bar triggers, or they can hold. It's always in long, but I am suspect of this 2 legs up in likely trading range. I don't like this. This is it's not doing what I want it to do. I do think we're going to get here, but I don't know the path. We could easily sell off all the way down to here before we go up there. Bears made money selling the 28 high during 33, scaling in higher. They're probably going to make money selling here and scaling in higher. Market's deciding, is this the wedge top where the red line is? 28, 34, and 41. It is a wedge. I still think 34 is the start of the new push up and reset the count. 1, 2, and 3. In other words, I think this might be the wedge. That will give you a third push to the target, the 79 low of yesterday, and yesterday's close. So I'm going to keep it like this for now, but I don't know. This is tricky. We could come down to the 38 low before we reverse up. So I do not think the probability is as good for the bulls as it appears. This is a trading range. Since we had a bear trend here, trend line break to a higher low, we could also get, give me 1 second, I think this is similar to the daily chart. I'll point it out in a second. If this is the higher low major trend reversal here, this might have been strong enough that it needed its own, and maybe this whole piece is minor. So we could easily sell off, somewhere down to here and form a double bottom with 38 and then rally. But I don't know. Right now we have a 3-bar micro channel. Bulls bought the close of 41, disappointed at 42. They bought back short, so close of this bar is 56.75. The high right here is 50. Excuse me, I got that wrong. The close is 58.50. This high is 58.50. By the close, Bulls bought. Disappointed, could not get out break even. I don't know. I'm flat. I wanted 42 to be another bull bar. And when 42 closed as it did, I just went ahead and got out. Whenever you can't decide on what the right thing to do is, it's normally better or when you think the math changes and it's not as favorable as it appears, it's normally better just to go ahead and get out of the trade and reassess. You can always get back in. And it's really important to realize that and to begin to learn that. If you're in a trade and it does something you don't want it to do, you can get out and get back in. So why do we bounce here? Look at the 38 high. Some bears sold the 38 high. It's a micro channel from here to here. So what is that? 5 bars. They sold this high, scaled in higher, and price came back to their first entry. Maybe they sold here, sold more below bear bar, 2 legs up, and they got out at their original entry. Other traders, they saw a micro channel. The bulls, they knew this was a target, so they bought as soon as price got to the 38 high, betting on a bounce. I still think we're going to the 79 low. But this is too much trading range price action, and even if we get there, I think there's sellers above. Some traders that did sell, especially the ones that went short below 42, I suspect most would get out during 44. If I was going to sell below 42, I'd be disappointed with 43 and probably want to get out. If you're taking that sell, you want the market to sell off quick like this. You don't want it to hesitate. And this is why, in part, the market is bouncing. It's still a micro channel ever since 41. Some traders, possibly bears, although I think it's a little risky, some will sell right around the 42 low, betting that bulls bought the 42 low, scale in lower, and they'll get out break even, which is part why we're selling off now. So may get a second leg down. I suspect it's better to be flat and wait. And just look at the past. Look ever since 38 to now. You have a 4-bar micro channel, 1, 2, 3, 4, a 5-bar bull micro channel, and you have a 5-bar bear micro channel. So whenever you get a 5-bar bull micro channel fall and then a 5-bar bear micro channel following, you're in a trading range. If we go to a 10-minute chart, that's what you have. So better to probably do nothing here. Sometimes that's the most important thing is, as far as being, consistently profitable or improving one's trading, I think one of the biggest things people realize is there's actually a lot of trades. And if you can trade small and just get pieces, little bitty pieces here and there of everything, and focus on not doing dumb things, as Al says, you can do really well. Most of the bad trades come from poor math or, math where it's really close to 50-50. And, I think one has to really figure out how to stop doing that. And in part, the first thing you have to do is you have to learn how to read price action. You have to study the course, read the books, and just study until your depth of understanding improves quite a bit. And then you have to apply it real time And then after you can apply it real time, you have to focus on the little things, mistakes you're making, or not reacting when you should. That's why I think always in trading is probably the best way for most people starting out, because it can help you understand where you need to get out. So for me, I really want the market personally to get down to the 38 low or sell off somewhere down there. I don't want to, if the market forms a buy signal here on 47, it's a second entry buy, but it's in the middle of this tight trading range, and I don't like that. I'd rather see the market sell off, maybe form a micro to the bottom, and then possibly test up here. And I keep saying test up to this purple line. We don't have to get there. This might be good enough. The low of this bar is 60.25. The high here is 58.50. So it came within a few points. If we get a big bear bar and then another really big bear bar, traders may conclude that that was a good enough test. It was adequate, and we may go back to the open of the day. I still think we're going to get down to the open of the day again. I said earlier, I don't think today is going to close on its high. Just look at all the selling pressure here, selling pressure on the open, selling pressure here, selling pressure here. This is not the characteristics of a small pullback trend. This is the characteristics of a trading range. It's really important to not be hopeful, as Al says. Don't be in denial as to what the market's doing. So I'm going to actually put this back to here and draw it like that. And obviously we have a larger wedge here. Maybe I can make that blue and something like that. Now we could also have this though, 1, 2, and 3. And I really try, I like to try and keep the chart clean. I like to kind of visualize here's a wedge, but I really want to, try my best to avoid drawing all the lines I can think of, because here's a wedge bottom, 1, 2, 3, double bottom. The chart can easily just get too cluttered. So the bears are trying to break out below a bull flag from 42 to 44. And so far, it looks like they're failing. But as a general rule of thumb, whenever you have what looks to be a pullback in what is likely the top of the trading range, you have to, the probability is never as high as what you think it is. Therefore, I don't think it's ideal to be buying right here. I think I'd rather wait for a stop entry, because I think there's too much risk of a downside breakout. Something like that. It's a trading range. And what do you notice about this measured move target? I'll give you a hint. It has something to do with the 31 high, or the 30 high. Traders that sold this high, 30, scaled in higher, they never got a chance to get out break even. They got a chance to get out break even, but they never got a chance to get out of 31 high. A bear breakout from here to here, projecting down, would take you a few ticks below the 30 high. If this is the trading range, bears that sold here and scaled in higher should be able to avoid a loss. And they have been able to avoid a loss, and they'll probably be able to exit the trade. Break even on the first, 31 high, or 30 high, profit on the second. You can see some traders bought the low of 44 or 45 during 47, and it bounced, and a lot of those traders sold, and the market closed on its high. Right here. Traders bought, scaled in lower, and they got out. So here's the low. Look to the right. They bought, scaled in, got out. That is a warning that a lot of those traders are only interested in scalping. And if they're only interested in scalping, if you think about it, if you're scalping out of a trade, you're anticipating disappointment. And if you're anticipating disappointment, that means that you expect the market to go further against you. If everybody knew we were going to the 79 high, the purple line, we would not be doing this. We would just race up to the 79 high. So I'm going to actually redraw this right here because I think we're going to the 38 low and we might go to the 30 high. Why is this so? Trade King asks, why is this not a bear flag considering the big drop yesterday? You don't think we're heading back to 3,700? I mean, it's certainly possible we head back to 3,700. My time frame right now is just from 26 to here. But if I go to and I expect we're going to have a lot of trading range price action. Do I think we'll get to 3,700? We certainly might. I think the biggest problem right now is we're just really extended. So this isn't a strong breakout, but it's extended. It's far from the moving average. I think we're going to have to go sideways for quite a bit and relieve some of the selling pressure. And, what would it take for me to believe we're going to 3,700? Well, if we get consecutive, if 37, it's a big bar. If 38, it's another big bar, and 39 is another big bar, I will begin to believe we're going down to here. So right now, I think a trader can buy and scale in, and they'll probably make money. The risk they take is if this becomes a bear breakout, they could get trapped. Now, I drew this line. I'm going to make it blue. This was a sell to close bar on bar 6. And you have to wonder, it never let traders out. It never let traders out. Some traders sold 6, sold more below 19, and they were barely able to get out break even. That sounds crazy, but there are some traders that will do that. They'll sell, and they'll just wait for a stop entry, sell more, get out break even. What are the odds we get down to the 6 close? I think it's low probability, but if we start to get consecutive big bear trend bars, it could certainly happen. Bulls, some bought the 44 low, scaling in lower, trying again to get out break even. You can see it right here. So it's basically this low is 51 even. Price went to, did I get that right? This low is 46.75. Price is getting close to it. It's possible some of these traders, it's a trading range, so they're probably going to be able to get out again. And the bears really need to prevent the bulls from getting out here. That would trap bulls and force them to sell lower. If the bulls can get out fairly quickly, then that would lower the probability that we're going to go lower. So for some of the bulls, they're deciding. They bought the 44 low, the 45 low, maybe they bought the 46 low. They're deciding how to manage the trade. They're disappointed with 47. Some of them they got out with that little bounce, trying to minimize their loss as much as possible. And now if we start to turn down, those traders could get trapped, which is why I think we may end up falling down to here. Now, we don't have to. It's 2 legs down, bottom of a trading range, testing the 38 close. If this bar closes on a tie, what do the bears do? Well, I think the bears get out of shorts above the bar. It's the second entry buy in a bull channel with an obvious target above. So breakout 47, bull bar 48. Actually bought above 48, taking a chance that we rally back up to the 79 low, but I'm going to be quick to get out. That's why I stopped talking suddenly. Market's deciding, is 49, 48 disappointing enough after 47 that the bears are trying to get out of the low close. The bears want to break out, pull back short, and a measuring gap 44, and 49. For the bulls that bought above 48, so far they're disappointed. They bought and they want the market to race up quickly. And if it starts to stall for too long, a lot of those traders will exit and take a few take loss, betting that the market is going to go lower. And whenever you take a stop entry, you really want the market to race up rather quickly. And if it doesn't, then that increases the odds that the market is going to have to go a little bit lower. Now, in situations like this, to me, this is a swing trade. To buy above 48, stop below 48, target somewhere up here. And it's kind of a Walmart trade, as Al calls it. You just take a chance that the market's going to race up, it's going to go up to your target where you get stopped out. So it's a low probability trade, which means most of the time you're going to lose. So disappointing bar on 49. So I got out below the bar and took the loss. And depending on what happens in the next few bars, I may look to buy again. I'm concerned as a bull about this measuring gap. Why not buy above the bar and use a wide stop and buy more lower? Part of it is this measuring gap here. Looks like more bulls buying below 48 than getting out. Outside up lowers the probability. It'd be better for the bar, it'd be better for the bulls if it closed when it's high. It's an okay swing buy above 50. Betting on micro double bottom 48 and 50, and betting that the 44 gap will close. I bought the close at 50. In hindsight, it was probably a mistake. Typically when you have that small signal bar, it's typically better to get out a measured move below the bar. For the bulls, 3 pushes down, 48, 50, and 52. Bulls want to get a bull bar closing on its high. In situations like this, I actually have a stop and measured move down of 50, just in case the market went one tick below and turned up. This was looking back, it was a dumb trade. Trading range price action, the signal bar was small, first bull bar and several bars. I really should have given this more room, maybe a measure move down of something, possibly a measure move down of this bar, which really I should have just put a stop below here to keep it simple. So that was a mistake. At this point, I would put a stop below bar 50. Being 3 pushes down, micro double bottom of 50, I would rather get out below bar 50 if it turns back down. Bulls want a double bottom 38, the wedge bottom, called a double bottom of 38, and they want to rally up to the 79 high. They need a good signal bar here, though. By the way, I changed my mind and actually am using a wider stop here. Bulls see a wedge bottom, bears want to break out below a double top. It's an expanding triangle, smaller time frame. Probably more sideways here. And I'm trying to comment on some of my trades, but I really don't want to. I don't want to influence people as well. I think it's a really bad idea when people start following other people's trading style, because some people are comfortable with wide stops, some people aren't. Some people are comfortable with just getting out below the bar and getting back in. So I'll be a little more cautious about sharing that. I'm just more or less trying to, I guess, share thoughts while I'm in a trade as well, if that helps. So the bulls see a wedge, and they're getting buying pressure, but they need to do something here. They need to close the gap below the 44 low. For the bears, always, if we're always in short bears, I don't know. I think a lot of bears would get out above 48 or 50. And, the trading, it's becoming a tight trading range, not ideal either. So we could easily just start going sideways here for quite some time. 30 seconds left in the bar, and it's a doji. It's good for the bulls, failed breakout below 50 and 52, but they really need this bar to close on its high. And it'd be better for the bulls if they could get, for one, a bull body, but also, a reasonable size bull body. On a bull body, but also, a reasonable size bull body. And there you go. It's a perfect doji bar. So disappointment and a reminder that this is probably going to remain a trading range. Look too short on the 60-minute chart. So it's possible that we have to go below this bar. We may not, though. But I don't know. I think bulls want to break out in the bulls ultimately, low too short, they want to see this as the bottom of a trading range and get an upside breakout. But probably more sideways here. So let's see what the bulls can do here. Can the bulls get a strong upside breakout? Can they close above the 51 high? Or will the bulls continue to be disappointed? And can the bears drive the market below the 53 low or the 38 low? Big bear bar, 54, breakout below 38. Bulls want to get bad follow through and trap the bears that sold below. Bears want to get another strong follow through bar on 55. At the moment, it looks like it's early to say. Some bulls are using this bounce. Some bulls bought the 52 low, the 50 low. They're using this bounce to get out of longs. They bought more lower, trying to get out, and they're trying to keep this gap open. The bears are. The bulls want this bar to close on its high. So let's see how this bar closes. Breakout 54, follow through 55. Bears want to break below a double bottom. They see a gap here, and they want another gap here, and they want a small pullback bear trend and a sell off back to the 30 low or the 27 low. The bulls see a wedge bottom, 44, 48, 55, 3 pushes, and they will reversal up back into the apex of this final flag here. So, important bar right now. Will the bulls get a strong reversal bar? Will the bears be able to prevent the bulls? And can the bears get another bear bar closing on its low? 60-minute chart, low too short, below 48. The bears want this 60-minute bar to close on its low. The bulls want the market to close above the 48 low. 39.75. And the 60-minute chart obviously is 38 low is the low of the 60-minute chart. So it'll be interesting to see. Can the bears close this hour? There's 15 minutes left in the hour. Can the bears close this bar on its low, which you have a second entry short, low 2 on the 60-minute? with the entry bar closing on the flow, or will this bar be disappointing? And if the market reverses up in the final 15 minutes, it put a tail on this bar, and that would disappoint 60-minute traders. I bring that up because it's common for the final portion of a bar to change the characteristic. And the bears obviously want the opposite. They want to keep these gaps open and get some kind of measure move down. And so far, the bears are doing a good job. But the follow-through is not that great for the bears, which makes me think this is more of a leg in a trading range. And if it is a leg in a trading range, we'll probably go back up to here before we go much lower. That's why I brought up the 60-minute. It'll be interesting to see. There'd be 3 bars left at the close of this bar. And all the market would have to do is close somewhere up here, which would not take that long. And that could create a very different picture for this 60-minute entry bar. Low one short below 56, but a bull bar. So there might be more buyers below 56 than sellers. We've reached the target, the 51 high, 44 low. Takes you down to here. These past few days, yesterday was a strong sell-off, and to break below a double bottom here. And my problem with the 60-minute chart is this low too short. It's a doji, so it's not ideal. It's not that great of a short, and it's also really far from the moving average. That makes me think that we're going to have to go higher and form a more complex pullback. So I think this is more of a trading range down here, and there's probably buyers somewhere below. And I think that increases the risk that the market goes above this high. Now, we could obviously do that tomorrow, but it would not take much to get above here. That is why I'm talking, and plus there's only 3 bars left in the 60-minute chart. That's why I'm talking about how this entry bar could reverse up. But so far, tight bear channel, and if the bulls are going to take control, they need to close gaps. They need to start getting strong bull bars closing on their highs, and they need to end the series of micro channels. So this is what I was talking about. A reversal near the end of the hour, completely changing the characteristic of the 60-minute chart. So now we're back in the apex of the expanding triangle. Big down, big up, probably going sideways to up. And assuming this bar is not closed on its low, which it on the 60-minute, I think we'll probably have to test the high of the current hour. So at a minimum, I think we're going to the high of bar 51. Trading range day. The market is usually forgiving. For traders that bought in here, bought the low of 46, bought more lower, it's giving them the opportunity to exit, break even. And it's the same thing for the bears that sold even the 28 low, sold the 28 low, sold more higher. They could get out, back to the original entry. Actually, I mismanaged this whole piece. I should have bought above here and just used a wide stop and bought more lower. I did not think we would fall that far. And instead I bought here, got stopped out, bought again, and used a wide stop. So I've been long since here, but not the way, the management was not that ideal. So I'm taking a chance that we go above the prior hour, which would be the high of the day, and get up here. But I need to see a strong breakout, and I need to see signs of strength as a bull. Otherwise, I'm going to be disappointed, just like the rest of the bulls will be disappointed, and look to exit. For the bears are getting up, and they'll step aside for a bar or two. However, if the bulls can't do anything, those bulls will excel again. It's possible the bears are going to try and form a lower high or another head and shoulders top. Double bottom for the left shoulder, head, right shoulder. So maybe we go up 2 or 3 legs up, and then we try and sell off again. But so far, this is looking good for the bears. Good for the bulls. So far, good breakout for the bulls. Micro channel. Let's see what this follow-through bar looks like. So, if the bulls were really lucky, I don't think this will happen today, but over the next maybe few days, if the bulls were lucky, they may be able to get something like this. Whenever you get and again, I think this might be a stretch, but whenever you have a bear flag that's low in a trading range, you always have to be open to an upside breakout of the bear flag. It's very similar to the 5-minute chart today. And although this isn't ideal, it's a bull. Right here's a bull flag. Let me just do like this. It's easier. 44, 45 is a bull flag. It's a high one buy. And whenever you have a bull flag at the top of the trading range, you always have to be open to the possibility of a downside breakout. And AND asks, can you also say a measured move is equal to the 46 high? I missed this question. 46 high to the 50 low. You could, but again, I thought this was a leg in a trading range. It's lacking strong consecutive bear bars, and it met I forgot about this target. It actually came all the way down to the 30 high and let the bears out, who sold the 30 high and scaled in. So to me, this had more characteristics of a trading range than a bear trend. And part of the reason for that is, it's one thing when this happens on the open, but the problem here, we've had a lot of buying pressure today. The other issue is it's not that clear for the bulls. Bulls buy, they buy these lows, they have time to get out of the trade, they have time to scale in. There's not a lot of clarity as far as should the bulls get out. So 60, close of the 60-minute bar at a minimum. I think we're going above the high of 60. It's a failed low too, so we'll probably trigger it. If the bulls are lucky, we'll get a strong breakout. And because of that, you have to think that something is going to be wrong with the bull case. We could easily rally and then fail on the 60-minute chart and create a wedge. 1, 2, maybe 3. So this is the lower high that the bears are trying to get. But after this many bull bars in a micro channel, probably minor reversal down and sideways. Bears trying to defend a break-even stop at the 42 low. Some traders sold the 42 low, moved their stop to break even. They're trying to keep the 42 low, the gap open. Probably going to close the gap, and the bulls that bought this low and bought more lower are going to make money. Bears want a lower high major trend reversal. After this many bull bars, probably at least a second leg up. This is damaging though for the bulls and increases the odds of sellers somewhere up here than buyers. The bears sold the 54 high during 59, made money. They sold the 51 high during 59 and scaled in, made money. So disappointing for the bulls. And a reminder that this is probably going to be more trading range price action. Bears also want to double top with 46 and 61, and a break below the neckline, measure move down. That target would take you down to this area. I don't think we'll get there. But even though 61 is following three bull bars closing above the midpoints in a 4-bar micro channel, really a 5-bar micro channel, it's still a credible swing short below 61, and therefore some traders will sell below it. Low probability, so great risk reward though. Sell below here, stop up here, and you may break below 57 and get back to the open of the day. Bears trying to get 3 consecutive bear bars and make the bulls give up. Bulls trying hard. It's now under 50% pullback from the 57 low to the 61 high. And the bulls need to do something here in the final 30 seconds. They need to prevent this bar from closing on the flow. Actually just got out a little under break even. A few ticks under break even. 3 consecutive bear bars, even though still a second leg up. That is not ideal for the bulls. And 15-minute chart shows a pretty good example of it. So 15-minute chart, tight bear channel, a big bear bar closing on its low, so we could easily trigger this and go lower. You don't need to see that on the 15-minute. You can see it on the 5-minute. So as a default, I put my stop when this bar closed. I put my stop 1 tick below the bar, and as the market started going up, I just decided to get out. By the way, this happens actually quite a bit as well. So break-even stops. If you sell below 61 and you get consecutive bear bars and you move your stop back to break-even, the market often will hit break-even stops. So, it's really a mistake for the most part to sell and then take part off and put your stop at break-even. I'd sell below 65, so probably going higher and probably getting to the 42 low. Good close for the bulls. Bears, they'll try and defend this stop, but some computers, I don't think many people do it. Al talks about it all the time. They'll sell here, sell the close, put a stop 1 tick above, risking maybe 1 point for a bear breakout below the 63 low and measure move down. Obviously, low probability. Outside bar, you have to be thinking about a possible second entry short here and 2 legs up. It's interesting how well the Bears are doing at defending the break-even stop here. You really need this bar to close on its low. Otherwise, there might be more buyers below it than sellers. Bears, yep, so tail below, increase the odds of buyers. Some bulls would get out below 67 due to it being a second entry short and a double top with 61. Triangle, so it's a swing buy above 71, and you're betting on a breakout to the upside into the close. 30 minutes pretty much left in the day, so if the bulls are going to do something, now is the time for them to do it. Otherwise, the bears will have a shot, or we may just continue sideways. So, not ideal for both sides right here. The probability is pretty close to neutral, but above the moving average, bull bar closing on its high, and if possible, we had a rally during bar 7 to here. Maybe this is a pullback, and maybe we get a breakout to the upside and close this gap. Low probability though. So I've got the question box open or the Discord. So overall with today, you know, it's always fascinating how you get a rally sideways for just a lot of bars and a sell-off, leg one, leg two. And actually, I completely actually was wrong about this entire right here. I thought that 42 never touched the break-even stop. It actually touched it right here. But you basically end up getting two legs down. Leg one, pull back, and leg two to the open of the day. So the daily chart, strong breakout bar. Odds were we were going to get a second leg. Odds are we're going to get a second leg down. And, you know, the bears prevented a bull bar today, which is good, and increased the odds of sellers above. I think there's a reasonable shot at getting down to the October 21st low. But if we do, I still think we'll rally and get back to 4,000 at some point. I think it's less likely we break below the October 13th low, but even if we do, probably buyers somewhere below. On the 5 minute, on the open, the odds favored a trading range for 2 hours. And the reason for that is yesterday we had consecutive sell climaxes here, 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 and here. So 50% chance on the open we would sell off, but even if we did, 75% chance we'd go sideways for at least 2 hours beginning before the end of the second hour. And obviously we began it on bar 7. So whenever you get a gap down after the market's already extended, 1 second, you get a gap down, you have to be wondering about the possibility of an opening reversal. And 50% of the time, you get a major reversal that reverses the direction of the original move. In this case, down. 80% chance on any open, you at least get a minor reversal. So it's low probability, especially in this context, to sell, stop up here. You know, maybe for a second leg, but really not all that ideal. Bar 6 and then bar 7 outside up. Traders that sold to close to bar 5 probably, you know, for me, I wouldn't sell with the market this far away from the moving average. I just don't think that's an ideal thing to do. And if the trader did, they'd probably get out 3 points, 4 points above the high of bar 6. And on bar 7, when you get a bar that big, a lot of traders, they believe the market's going higher. Odds are we're going to get a second leg up. However, a lot of traders don't want to buy the close of the bar and put a stop below because the risk reward's bad. They would rather buy a 50% pullback. Give me just 2 seconds here, guys. Okay, I'm back. So most traders will instead try and buy a 50% pullback of the bar here to here. And you can see, no surprise, it let traders out. This is also bears sold this high, scale it in. They're trying to get out break even. 2 legs up, bar 9 closing on its high. Bar 8 is a warning that there's something wrong with the rally. Why were bulls not willing to buy at the close of 7? And instead, 8 had bad follow through. That's a warning that the market may not go much higher. 10, 2 legs up, you can call it a low too short, but it's a micro channel, so it might be more buyers below than sellers. Back at the open of the day, back at the high of bar 2. So probably a trading range and sideways here. 11, 3 pushes up, 1, 2, 3, but a micro channel. We still may get the upside breakout, and the market's forming gaps here and here. So that's good for the bulls. 12, a give up bar, but consecutive buy climaxes, possible parabolic wedge, 1, 2, and 3. So this might be more of a sell the close bar than buy the close bar. I still think it's reasonable. We will go for a measured move, low of 7 to the open of the day, projecting up to yesterday's low. But I do not like this rally. Big down, big up, makes me think there might be more sellers up here than buyers. And the reason for that is it's hard to hold long this move. You don't want something that's really difficult to hold long, because it makes traders, if you buy this close, disappointed here, and then you see this bar, and then you see this, it's hard to stay in. These tails make it very tempting for bulls to want to sell out of longs. And if bulls want to sell out of longs, it makes it tempting for bears to want to go short. And bar 13, big bear bar, but micro channel, probably buyers below, and the first reversal up likely to fail. I one buy. You can call it a double bottom with 10. Can you buy above the bar? Some traders will. They'll bet on a wedge, 1, 2, 3, and this as the pullback or breakout attempt of the wedge. 13 might be big enough, though, that you may get a small second leg down. So traders buying above 14 probably need a wide stop. Somewhere below 8 is certainly below, probably below 9 as well. And better if you can scale in or buy more lower. 13, bull bar, testing the close of 12. And 14, the give up bar. But now we have 2 legs up, and 16 being the best looking bull bar of the rally. First close above the moving average in several bars, so it might be more profit taking up here than selling. Possible wedge, 3, 12, and 16. But 3 bar micro channel, so probably buyers below. Bear bar on 17, so some traders will get out below 17 and look to buy a pullback. Other bulls who bought the 16 close will be disappointed on 17 and try to get out, break even. 18, second leg up from 16. Probably not going much higher. The bulls have a possible gap, the 17 low and 12 high, and they want to keep that gap open and have the market go for a measure move up. 19, you can call it a micro double top, second entry short for the wedge. 3, 12, and 19. The problem with selling below 19 is it's a micro channel since 14, so that increases the odds of buyers below. 20, good entry bar for the bears who sold below 19, but might be a 50% pullback. 21, 3 consecutive bear bars increases the odds of sellers above and at least a second leg down. Might be buyers around the 14 high. Some bears sold this high, scaled in higher, and they'll be looking to get out, break even. Now, 13 was a warning. It was a big enough bar that it increased the odds of sellers probably above the bar. And because of that, it lowered the probability of this breakout. So even though here, I don't think we're going necessarily straight down, I do think we'll get to the moving average and there's probably sellers above. My one thought is if we go to a new high, we'll probably find sellers somewhere in this area. 22, bad looking high one buy, probably sellers above, but may get all the way to the 19 low before the sellers come in. And we're getting close to it here. And 24, another bear bar closing on its low. 25, another bear bar closing on its low. Possibly a wedge or 2 legs down. 2 legs being 22 to 25, or you can call it a wedge, 17, 22, and 25. At the target, open of the day, in the low of 14, might be more buyers down here than sellers. 3 consecutive bear bars are here at 21. 3 consecutive bear bars, 19, 20, 21. Odds were we were going to get a second leg down. Now the bears have a second leg, so that lowers the probability for selling down here. And it's also a bad location to sell. It's possible we get all the way down to the 6 high, where the first spot where bears sold and got trapped. But we may have to bounce first. 26, second leg up from the rally up to 18. Some traders bought the low of 18, bought the close, or the low of 19, scaled in lower, scaled in lower. They may use 26 to get out, break even. 27, you can call it a double top with 23. but 26 is a strong enough bar. There's probably buyers below and not that great of a sell below the bar. So the point, sorry about that, the point of saying that is there's probably buyers somewhere below. And those were the buyers. Now, why did the bulls scalp out? Well, a few reasons. One, they were disappointed with the follow through on 27. And the second reason is bulls who bought in this area, betting on the micro channel since 14, they bought this low, scaled in lower, and they're getting out break even. The bears know this, so they're selling as well. 28, breakout pullback short and called a low 1 short or a low 2 short with 23. Probably buyers below. So some bulls will buy 28 low and more lower, betting that the downside is limited. 30, possible double bottom, failed breakout of the open of the day. Probably going to get a second leg up from the 26 close. So I think there's more buyers down here than sellers. And there's the buyers on 31. Now 31 might be similar to 26. 31 is a good bar for the bulls. Outside up bar, so big risk. Might go more sideways and have to test the 30 high before it goes a lot higher. 32, double top with 28, but doji, probably buyers below 32. And there might be so many buyers below 32 that it doesn't trigger. And instead, some traders may just buy the close, betting that worst case they can buy more lower, or if it goes straight up, they can scalp out. 33, bull bar closing on its high, trying to break above the 28 high. 28 is also a possible head and shoulders top, left shoulder bar 12, head bar 18, right shoulder bar 28. And if we break above it, we could go for a measure move up. 34, possible give up bar. And 35, a reminder that the market's still in a trading range. Some traders bought the close at 18, bought more lower, getting out break even. Whoops. 35 is a major trend reversal. Some traders will take the short, but the problem is it's a micro channel since 30, so probably buyers below and at least a small second leg up. I still think we'll have to get to this line up here, yesterday's close. Bulls who bought 34, disappointed 35, trying to get out at the 34 close, and that's what happened on 36. And 37, bear bar, inside bar. It's reasonable for bulls to exit below and look to buy again lower. And obviously, the bulls that did never had a chance. They'd be forced to buy high in what's likely a trading range. 38, 50% pullback from the low of 30 to the high of 35. And the problem with buying above 39 is it's a micro channel since 34. 1, 2, 3, 4, 5 bar micro channel. So it might be more sellers above than buyers. 40, you call it a double top with 35, but 40 is a very small bear bar compared to 39 being a large bull bar, which increased the odds of higher prices. Now we have a wedge, 28, 35, and 41. Might be sellers up here. 42, wedge top, here, here, and here, within a larger wedge top, 3, 19, 42. Reasonable for bulls to exit below and wait for a couple legs down. So lots of consecutive bear bars here, testing the wall back up. 44, 3 consecutive bear bars. Some bears sold at the high of 38, scaling in higher, and those bears will buy back shorts here. The bulls know that, so you'll have bulls buying in this area, which is in part what caused the market to bounce here and here. 4 consecutive bear bars within a 5 bar micro channel, probably sellers above and at least a small second leg down. probably will have to get to the 38 close or the 38 low. Therefore, there might be more sellers below this bar than buyers. 48, second entry buy, 2 legs down, testing the 38 low or the 38 close. If you take the buy, it's a swing buy, and better to use the wide stop. First bull bar after several bear bars, probably more sellers above. 49, well, 50 is an outside bar, so forming an expanding triangle, which is basically an expanding trading range. So probably sellers above and buyers below. The bears are trying hard to keep this gap open. 50, low too short with 49. 51, low too short with 49. Open gap, so probably going lower. May have to get to the 30 high right here. 54, try and break below the 38 low and get a measure move down. 55, follow through. 56, it's a low one short, but several consecutive sell climaxes, 44, 50, 55, that the market may not go much lower. 56, second entry buy, and the bears started giving up on 58, 59, and 60. So 58, 59, 60, 3 consecutive bull bars, strong enough for at least a second leg up. 61 is a credible lower high major trend reversal. You can call it a double top with 46 and 61. But either way, here's the left shoulder, head, and right shoulder. Reasonable for bears to exit. It's reasonable for bulls to exit and for bears to sell, but tight channel, probably more minor than straight down. 62, 63, 3 consecutive bear bars. Probably, hard to say. Strong enough breakout for at least a second leg, but it's a major trend reversal, so I don't know. It's a tough call. Do you get out if you're a bull? Do you get out below 63? I think you can. The fundamental issue with the bears is most of the time you do not get a major trend reversal from a really tight channel. So same thing here. Tight bear channel, higher low, probably not going to form a major trend reversal without at least forming a micro double bottom with 25 and 30. So probably the same thing with 61. And 67, second entry short. So possible double top, lower high, major trend reversal, maybe a triangle, 46, 61, 67. Good entry bar on 68. Another bar 69, forming a tight trading range. So breakout mode, 50-50 chance the market breaks to the upside, 50-50 chance the market breaks to the downside. And 71, credible buy above, but following a 4-bar micro channel, so it might be more sellers above. And 72, 73, follow through, but testing the top of the triangle. So there will be bears who will sell the close, put their stop 1 tick above, betting that the bulls fail. And that's what happened on 74. 75, breaking below the triangle. Probably, is it sell the close 75? Probably is consecutive bear bars. All the bulls that bought in this area are now trapped, and the odds are they'll use any bounce to try and get out. And that's why 76 open, went a few ticks above and immediately sold off. 77, another bear bar, but at the open of the day, so target met. I want to see one thing here. Measure move takes you from basically measure move of the triangle takes you down to the open of the day. It's also 2 legs down, leg 1, pull back, leg 2. You have a wedge top, 1, 2, 3, or you can call it nested wedge, 1, 2, 3. So this is, and the third push is nested into 3 pushes. So whenever you have a wedge, like so, typically you can expect 2 legs down. And since this ledge from here to here lasted just shy of 40 bars, the odds favor that you may get around 40 bars for the correction. Excuse me. I bring that up because this channel down is so tight, it may be the first leg in what will be 2 legs down, which we got at the end of the day. And sell the close, but at this point, for the most part, traders are probably better off not selling and getting out of shorts. So overall, trading range day, spike in channel that developed into a larger trading range. Whenever you have the open of the day and it's in the middle of the range like this, you always have to be thinking, here's the bottom of the range, here's the top, the open of the day is in the middle. We may oscillate around the open of the day several times. And here, we couldn't reach it here, but we got close. And whenever you have this much trading range price action, you have to often wonder if the market will sell off to the open of the day. Stop entries, you can take a sell below R3, not ideal, far away from the moving average. And other than that, you can buy, it's hard to do. You can buy above 7, but I think most traders are better off buying pullback at 7. Sorry about that. You can buy above 9, and other traders, they'll buy above 14. They can also buy above 15. And then for the sells, it's okay to sell below 19, betting on 2 legs down. And if you don't sell 19, maybe you sell 20 or below 21. Some traders will sell below 23, betting on a test at the open of the day, but it's somewhat aggressive. And do you buy above 26? You can, but not ideal at the moving average and type bear channel, so maybe a second leg down. Probably better to wait to buy above a bull bar like 31. And if 32 closed on its low, closing below the midpoint of 31, you probably exit below the bar. But there's no reason to get out on 32. And then for the bears, I would do nothing in this area. And I don't know, maybe some traders can sell below 42, but micro channel aggressive. Other traders sell below 46. And, do you buy here? You can, but fairly tight channel, make it a second leg down. Bulls can buy above 58, and as far as, maybe you sell below 74, but that's pretty aggressive. And that's pretty much always in. So for always in, sell below 2, sell below 3, sell below 4, and buy above 8. And, do you get out below 13? Maybe. And if you do, you buy again above 14, get out below 19, bears start selling, and bulls probably get out above 26. Not ideal to buy, and they probably buy on 31. If they get out below 37, they arguably buy again above 39, but top trading range not ideal. And bears start selling here. They probably get out there, and not really ideal to sell in here. Bottom of the trading range. Aggressive bulls buy. They get out below 61. They buy again 64. Get out below 67 or 68, and then, do they buy again 71? Maybe, but if they do, they got to sell again below 74. And then it sells to close all the way down. Limit orders. First limit order, probably buy below 12. And, do you buy below 18, 19? I would not. Consecutive buy climaxes, consecutive pushes up, so not really ideal, and the pullback could be deep. Sellers above 22, and probably buyers below here, 28. And sellers above 45. Probably buyers somewhere in here, maybe below 56. And that's probably the last limit order trade. All of this is limit order trading, but I don't think it's ideal for most people starting out. And buy the close, sell the close 4, sell the close 5, but pretty dangerous. Buy the close 10, buy the close bar 9. You can buy closes here, but 3 pushes up. If anything, I'd take profits up here and start buying pullbacks. Maybe buy the close on, technically buy the close on 13. Buy the close 15. Traders sell the close 20, 21. Probably buy the close at 31, 32, 33. Buying the close at 34 you can, but pretty aggressive, tight trading range. Buy the close at 39. And hard to do anything in here. Probably buy the close of 59. And then sell the close 75, 76, 77. Let me take a look at it. Questions. Someone asked, hi Brad, I would love to hear your thoughts pertaining to exits when you get a chance. I think the first thing I would relate it to is always in. Learn where swing traders get out. And it's kind of what I just talked about. If you're selling the close, the first exit you find is where you're obviously wrong. And you're obviously wrong on the close of 7. Therefore, the worst case, you just get out of the close of 7. That's not ideal, but that's a starting point. Then you start to figure out, okay, if it's sell the close, sell the close, sell the close, and 6 is not ideal, but if you do, maybe you get out a couple points above due to the risk of an opening reversal on the open. And then it's you buy anywhere in here. If you can get out below 13 and get back in, that's okay. But if you have trouble getting out and getting back in, better to just buy, use the wide stop, and hold for 15 or 20 bars. Even this sell-off here led to sideways. Now, bar 18, and what I would start with is trying to find, 3 pushes up. In general, the odds go down of higher prices in a bull trend after the 3rd or 4th leg. Therefore, when you can find a 3rd or 4th leg, you're really better off taking profits and buying lower. Hence, 3 pushes up, 1, 2, 3. Therefore, better off getting out over here and waiting for a pullback. 3 pushes up, 1, 2, 3, nested, 1, 2, 3. Therefore, better off getting out, looking to buy lower. So the exits, and that's why I like always in, because always in is really swing trading. And if you understand how to swing trade, you're better equipped to understand how exits work in terms of swing trading. And when you're scalping, you're basically betting against trending behavior, if you really think about it. So if I'm buying breakouts down here, scaling and lower, then I have to understand what the swing traders are doing, the bear selling closes, in order to know how to properly manage the trade. If I'm selling these highs, selling this high, I have to understand that it's a possible 3rd push up and what the bulls are thinking. Or if I'm buying below bars, buying below 12, I've got to understand what the bears are thinking. You have to understand the opposite case. That's why buying below 19 is not ideal, because it's 2 legs up in a trading range, wedge. There's a much greater risk that this will fail and test the low of this move. So I would start with find exits and figure out always in and where traders have to get out. Then you start redefining, maybe there's a better area you can get out, and then maybe there's a better place to take profits. That's why a lot of traders, they understand always in, but they don't trade it all that often. The terms of strict always in. They're not selling below 3, buying above 7, holding, because it's not worth it. It's much better off to scalp in spurts, sell this close, maybe sell this close, or buy here, buy 50% pullback, scalp out, buy as this bar is going down, betting that it's not going to close as a bear bar closing on a flow. Buy this low, scale in, scalp out, sell this close, sell above this bar, scalp out at the open of the day. That's much easier to do than swing trading in a trading range. And often, I think for most people, they start to accept that most breakouts fail and to not buy too high or sell too low. So it becomes ingrained in them to fade breakouts, which makes it a little easier as far as not being hopeful. So it looks like that's it for questions. What do we do tomorrow? Well, tomorrow's Friday, so come back to the weekly chart. Tomorrow's Friday, so we'll look at the weekly chart in a second, but I do think, I think there's buyers if we go straight down. This sell-off's pretty climactic, which makes me think we'll have to pull back for a couple of days, and that the market may go above today's high tomorrow. Weekly chart, probably buyers somewhere below, and the downside probably limited. I think we'll get a second leg up. But from the daily chart standpoint, we could still get a second leg down here and then get a second leg up. And that would work for both the daily chart and the weekly chart. All right. Hope everyone has a good weekend. Well, it's Friday, so today's Thursday, so I hope everyone has a good rest of your Thursday. And I believe Rose is in the webinar tomorrow. Have a good one.